IDFC institutions, enhance collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhance collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities, In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics.
Good morning, everyone. Thank you for joining us this morning as we talk about a very important topic. It's become extremely topical, especially in the last few days. We're talking green hydrogen today. We've got with us today very esteemed panelists who will, as I question them, introduce themselves to you one by one. I think green hydrogen is a topical issue, especially for us. Yesterday, we had the awards at a COP28, where one of our clients, Hyphen, won one of the esteemed awards for the evening. And just to give you an idea of how important this conversation is, that particular project has got a substantial investment that will go into it, approximately 6.6 billion euros in total capital cost that will have to be raised to fund the Hyphen project. It's based in our neighbors in Namibia. We have a representative from Namibia here today who might be able to tell us more about the project. But obviously Africa, based on our abundant renewable energy resources in terms of solar, wind, and hydro, is well positioned to be a driver of the industrialization of green hydrogen on this continent, and to facilitate the continent as well as the rest of the world's move away towards and reliance towards fossil fuel investments. This morning we're going to start with our questions first. We had hoped to have Joanne Bate from the IDC, the Industrial Development Corporation of South Africa, join us and she will present to us a little bit later in our panel discussion the view of the world of green hydrogen in South Africa, and in particular, the IDC's work to date that they've done to develop the industry. They're quite a significant player in our market for industrialization of green hydrogen. We'll start off right away with our first question, and I'll introduce to you Andrew Johnston, the Climate Fund Manager, the CEO for Climate Fund Managers. He will tell us a little bit more, and this is a question that everybody wants to know about. In fact, I was asked to concentrate on this today. So we'll start at the back today, which is, how do we fund these mega projects such as green hydrogen? What type of financial enablers do we need to fund these type of projects? How can private sector and public sector jointly participate in these type of projects? So we'll start with Andrew. Andrew, maybe you can tell us just a little bit in 30 seconds what a CFM does.
Certainly. Can you hear me okay? So it's on? Yep. Great. Thank you very much to be here. Hydrogen. Hydrogen for us is sort of a confluence of a lot of almost inevitable impacts and inputs which have derived out of the journey and the battle against climate change. Probably commencing 6 years ago in Paris, the trajectory of climate finance has gone for really the low-hanging fruit. It initially focused on renewable energy, and then subsequently focused on water, both of which are dimensionable, and now it's moving into a natural consequence, which is the combination of those two, power and water manifesting in hydrogen. It sounds easier than it is. The other thing it's drawing reference to is probably the SDG that least of us paid attention to the outset, which is SDG 17, which is partnerships. And what hydrogen represents is really a combination of deep partnership of technology, of parties, of risk, and of finance. And in answering the question, what Climate Fund Managers does, it is a practitioner of an instrument called blended finance. And what blended finance means is actually aggregating capital from different parts of the financial spectrum, which have different risk tolerances, and aggregating it together and blending it together so it can be deployed in a combined and scalable form, such that they are comfortable and aligned on the purpose, but equally comfortable and aligned with how they share the outcomes and the risks. What this means in practical measures is it means taking capital which is highly risk absorbent, like development capital, and equity capital, which is also risk absorbent and quite aggressive in its deployment and agile, and combining that with instruments which are much more scalable, but probably more rigid in their application, being debt instruments and even guarantee instruments. All of these have to come together to actually finance the 6.8 billion that you referred earlier on. So the easy and simple answer is everybody's got to work together. All the instruments that are available need to be used in a tactical way to aggregate to the scale that we need, and we can talk a little bit further in that as we go down further into this panel.
Great, thank you. Thank you very much, Andrew. I think we spoke about the ticket size. We started speaking about the ticket sizes and how big they are. I was hoping that Iluma would be able to give us more insight, especially in terms of what you see financial institutions' roles are, including pension funds in this, and how they could assist us with our drive for bankability to make sure these projects are investable.
Hi, good morning everyone, and thank you for inviting me. I'm going to try and pick up from where Andrew left, because I like the way he laid it out as it relates to various parties and especially tolerance for risk. But just to start, I'd say that the Africa Finance Corporation is, for all intents and purposes, a DFI that invests equity, senior loans, or mezzanine type instruments in projects across the spectrum, typically within the power sector, or even natural gas and oil, telecoms, roads, transportation. I look after just the power business, generation through to distribution. Now, in terms of financial institutions which come in different spectrums and different risk appetites, as I think Andrew has said very well. Most financial institutions, when they look at this particular space, they will see it as nascent. And they will also, and I'm being somewhat open, they will also see it as requiring a little bit more commercial proof in terms of payout. There is no question that in the future there will be a significant amount of traction. There is no question that in the future there will be this would be a lot more common and a lot more participation would come in. But as of today, in terms of what is proven, there is a little bit of work to be done. So what that does is that it has an implication as to ticket size that people can put in. It has an implication as to the universe of parties who can participate. Ourselves, we are looking at, on a pilot basis, something in Mauritania and another in Egypt, and it's intended for the export market. It's fairly unique type of off-takers who we believe can pay for the output of this. With respect to your question, especially as it relates to pension funds, I'll share my personal opinion. I would like for my pension for sure to be there when I need it. And so what that means is that in my view, even though there are huge resources available for pension funds, I'm not sure that pension funds can get into something like this at this stage without a great deal of guarantees and wraps that allow them to still make money even if things do not pan out. One last thing that is important to mention is that just as in any other business, when you've got a business in infancy such as this, so let's take a business that's almost proven, electric vehicles. There are several parties in it. Who do you bet on? So you have the technology issue, you have the demand issue, you have market issues, and you have the who do you bet on? You have the same thing here. If I were a pension fund or if I were managing people's pensions money, I would have to answer all those questions. And I'm not sure that there are many people that I would be comfortable answering that question with my pension money. Hopefully I've been somewhat transparent.
Somewhat.
Thank you, Luma. You've been very transparent. I think on that note, it's probably best to then move on to somebody who I believe has got quite a bit of knowledge in this particular area, and that is the possible uses of hydrogen, because that is part of what will drive bankability. The possible uses of hydrogen, we know that hydrogen and its uses are expanding across multiple sectors, including power manufacturing processes, etc., and the cement industry. So I was hoping that Joanne has caught her breath and is able to tell us a little bit more, especially in the industries that you've seen, market demand, and where we could see an ecosystem of infrastructure starting to develop. If you could give us more insights on what industries you see starting to be spearheaded by the industrialization of green hydrogen, as well as finishing off by telling us what your views are on countries like ours, developing countries, mobilizing climate finance for green hydrogen.
Thanks.
And welcome, Joanne. If you could
Thank you
also
so
just
much.
introduce yourself and tell us a little bit about what you do at the IDC.
Will do. Thanks so much. And sorry to disrupt, and apologies, Andrew.
I just talk about partnerships. So
This is a real partnership in action. So I'm Joanne Bate. I'm the Chief Operations Officer of the Industrial Development Corporation. And people often say, what's a COO doing talking about industrialization and value chains? Well, in the IDC, the operations are the front end of the business. So it very much is the planning, the value chain mapping, the project development, and the transactional support in the front end of the business that falls under my portfolio. And I've also been leading, on behalf of the Department of Trade, Industry and Competition, the Green Hydrogen Panel, where I've been the chairperson since 2021. And we finalized the commercialization strategy after public commentary, and it was approved by Cabinet in October this year. Sorry, the months move so quickly. And the first round of comments that came through on the initial draft of the commercialization strategy very much indicated the assumption that South Africa's green hydrogen plan is about exporting scarce electrons to decarbonize the global north. And the revised commercialization strategy is very clear in emphasizing the local decarbonization opportunity and industrialization opportunity that green hydrogen presents. So Catherine's mentioned the cement industry, the steel industry. So there's a number of energy-intensive users who are heavily dependent on heat to support their processes. And even a 100% green Eskom isn't going to enable their businesses to rapidly decarbonize. So what we're seeing is a number of use cases emerging. We've seen the whole PTX debate where the conversation has shifted from how do we produce green hydrogen at price parity to grey hydrogen, to how do we create value-added products that are in demand for use cases locally in South Africa and globally to decarbonize industrial pathways in the rest of the world. And these include green DRI and green steel, where there's some immediate use cases, as well as demonstrated benefits from being early to market with green product to supply into both South African automotive industry as well as into the global north for their consumption. Green ammonia, we currently in South Africa, and I think many emerging markets, are very good at importing highly toxic chemicals to support our agricultural production, which is not in the best interests of either our environments or our health. So there's a significant opportunity for green ammonia as a fertilizer input into the agricultural sector within South Africa to ensure that, again, we produce high-value premium green products, both for health and local consumption, as well as for export into the global markets. So we've seen a number of these use cases emerging. One of the critical industrialization value chains is the inputs into the green hydrogen value chain. So South Africa sits on a significant value or volume of global platinum reserves. And we saw the automotive industry and mining houses work very well together in the platinum inputs into ICE vehicles. What we haven't seen is a similar level of collaboration to accelerate the production of electrolyzers and fuel cells. So we really do believe that that's a significant opportunity for South Africa to fast track both industrialization, which brings with it jobs, as well as to exploit our platinum reserves and to support our ecosystem. We're already seeing cost-effective use cases of fuel cells, even if they run on grey hydrogen, will be a far better environmental solution and cost solution than diesel generators. So we need to think very differently about how we use this. We don't need to wait for the perfect ecosystem plan for all the pieces for a commercial scale hydrogen production to happen. We need to think about how we can accelerate some of these value chains so we can start decarbonizing townships, small businesses, and large industries while we build the green hydrogen potential. And I think, and finally, just really thinking about the just transition. You know, we often get caught up in the debate of 100,000 jobs in the coal sector that are going to transition over 25 years. What we don't often talk about is the 20 to 200,000 jobs, 20,000 to 200,000 jobs that are in the petrochemicals and steel sector that are at risk by 2030. And that really is where hydrogen can play a significant role in enabling the decarbonization of those industries. We already are producing 2.5 million tons per annum of grey hydrogen. It's not inconceivable that that shift can happen to produce greater quantities of green hydrogen. But it does need catalytic funding to actually unlock these value chains. And this is where I do think that if when we're thinking about our pension fund money, and I'm going to pick up on the piece as I walked in, We look at Sasol as an entity that is strongly criticized with its shareholders meeting being disrupted by climate activists. At the same time, you have shareholders who are demanding dividends. Now, how do you rapidly decarbonize a company when their shareholders is only wanting fossil fuel dividends? So I really think as investors and as activists, we need to think very differently as to what is in the right interest of pension funds, because it's not necessarily a dividend today. It's a sustainable economy with jobs in the future. Thanks.
Thanks, Joanne. I think, Iluma, you've been answered on your concerns.
I'd be happy to, but I'll let others speak first.
Thank you. Did you want to add? Are you just holding the mic?
Yeah, okay.
No problem. Thank you very much, Joanne. Joanne, we anticipating your presentation at the end of our panelist discussion. So we're looking forward to that. So as soon as we're done, we'll allow you to take the stand. I also wanted to discuss something that we have heard many, many times before, which is we talk about Africa being at the forefront of this development. But Africa is also severely affected by the impact of climate change. And here I'm talking about the scarcity of water, our attempts to create energy security. We're not there yet. So renewable energy is quite important for us. And hydrogen, in terms of its inputs, consumes both of those. So I would like to understand, and I'm hoping in this instance that the person that can assist us is Jonas, can assist us with what South Africa and the rest of the continent, especially Namibia, who's just started a very ambitious project of green hydrogen. What can be done about meeting those challenges and mitigating those risks that we are concerned about?
Thank you, Catherine. It's a great conversation, and this is really one of the core fronts of the energy transition, and our task is to make sure that we do this as well as possible. Thank you, not just in other parts of the world, but that we really make sure that we do this in Africa. And together with Jabri and the team at the UN Climate Champions, we commissioned McKinsey last year to do a report on the green hydrogen potential in Africa. And they very quickly came to the conclusion that there are huge numbers of jobs that can be created, as Joanna said. There is a slight catch. We need a couple of $100 billion a year. And so the key question, I guess, is the sort of how do we find the answer between the two of you here? Or to what extent is what Andrew is talking about in terms of blended finance mechanisms a way of reassuring your pensioners that this is the way to go? And finding many, many more innovative ways of structurally de-risking these projects, both financially and legally, so that we make sure that this really takes off now. And this is what we have to do with urgency. Now, one of the ways, and to answer your question, Catherine, we got to make sure we do it responsibly. Mm-hmm. I sometimes define our organization and this Africa Green Hydrogen Alliance that we support together with Jabri, that consists of South Africa, having currently the minister, the chairmanship of AGA, and Namibia are also involved. It's a great way of collaborating, learning from each other. And one of the things is, the way we define it is, have we learned from the mistakes in the oil, gas, and mining sector? And the answer is, partly, but we are about to make many of the same mistakes unless we're careful here. So we really need to double down on standards, on taking job creation, the SDGs that Andrew mentioned. Those things need to be taken totally seriously. And there is an issue here in that the money that needs to come in is so enormous, and we're so desperate, and it's so urgent that, and the path towards financial investment decision is so hard as it is, that we might on occasion think that we will do the responsibility stuff afterwards. So that's why we in the Green Hydrogen Standard, second iteration was adopted earlier this week, the contribution to the SDGs is built in. It is a requirement. How you deal with water use is built in. It is a requirement. Now, to answer then your question on water, yes, you're right. Our raw material, our raw product is a natural resource that is being manipulated, if you like, is of course water. And it does use a lot of water. But the first thing I would say is, don't be fooled by that to think that the amounts of water are way, way bigger than other industries. I'm not saying it's not an issue, but textiles, petrochemicals, and so on use more water than it does to split water into hydrogen. Now, there is of course the issue that a lot of this water splitting, producing green hydrogen, will happen in places where it's sunny and windy, where we tend not to have a lot of water. So we got to take that issue very seriously. Of course, in the Namibian case and many others, we have the option of desalination. And again, it seems that the cost of desalination is actually relatively minor for these very large projects. So that's okay. The problem or the issue we need to look out for is that we do the desalination responsibly. And that, my last point, has two dimensions. The first, we got to make sure that we do something responsibly with the brine, with the salt that comes out. And there are way too many examples around the world where that's not being the case at the moment. So we need to set and follow high standards when it comes to that. And the second aspect is we got to make sure that that capacity to, on an industrial scale, produce desalinated water is also used not just for industrial purposes, but for local communities. And we need to hardwire that into the project from the beginning.
Thank you. Thank you very much. So it seems that you're saying that as much as we investing big ticket sizes into the production of hydrogen, we also have to invest responsibly into the ancillary industries, the infrastructure that require for green hydrogen, that is water and so forth. Thank you for that. I'll come back to you. I'm not sure if you actually introduced yourself, Jonas, to
Oh, sorry, I'm Jonas Moberg, the CEO of the Green Hydrogen Organization. We are a foundation that promotes the responsible accelerated production and use of renewable green hydrogen.
Thank you. Joanne, would you like to add?
Thanks. I wanted to build on that, to just talk to some practical examples of the projects that are currently in development. And the one project in the Northern Cape, where, as you pointed out, abundant sunlight, not a lot of water, is focused on grey water that would previously have gone into the municipal works. So it's looking at purifying the water to the grade required for green hydrogen, but at the same time scaling up operations in order to provide potable water to the communities. So there's a project that's designed with the intent of both taking grey water out of the municipal system, which is actually built for biological waste, not for chemical waste. So it has a value add to the municipalities as well as a value add to the communities. And if we look at the project out of Kucha, they're focusing on desalination with respect to upscale the size of the desalination plant, which is an overall very small cost of green hydrogen, which allows them to provide surplus water into the communities and the municipality. So both projects very much using the design principles of ensuring social and economic support to the communities in which they operate. I think similarly on the renewable side, a very real plan within the projects to ensure that there's electrification to communities in those provinces of the Eastern Cape and the Northern Cape, where the grid isn't going to allow that access and connectivity for at least the next decade. So it's good to see these design principles built into the early stage hydrogen projects of ensuring real impact and real positive impact to the communities.
Thanks, Joanne. Thanks for that insight. Benedict, because you and we're all very excited about your project, also because the DBSA is involved in it, obviously. But I was hoping that in terms of this theme that we're still discussing around water, if you would be able to shed more light on the potential for green hydrogen to incorporate strong adaptation principles and rationale, and the potential risk that you see for maladaptation in this context, especially in light of what you are currently developing in your country.
Yeah, thank you. Thank you so much for that question. I'm Benedict Libanda. I'm the CEO of the Environmental Investment Fund of Namibia. We are pretty much a team that is responsible to implement the green hydrogen strategy and roadmap of the country. So we also do a lot of fundraising and financial management of the green hydrogen program of Namibia, which is under our environmental commissioner, Mr. James Mnyope. So we do a lot of administration support to that program. When it comes to really green hydrogen from whether mitigation or adaptation point of view, I think there is a lot of questions that we would like to address and to demystify. One of that is what is the benefit of Namibia involving into green hydrogen, considering that we are a net carbon sink country? Are we only satisfying the needs of the global north in terms of exports? I think that question comes a lot in our conversation. So from when we see it as Namibia, we see this as an opportunity for economic transformation, to build value chains along different sectors of our economy. This is looking at the agricultural sector, where we could produce ammonia, green ammonia for the fertilizer industry. We're looking now into the rare earth minerals, where we can have, green iron, mining activities in the country, as well as in the shipping industry. So these are huge, huge opportunities to address the much needed challenges that we are facing. If we look at Namibia currently, unemployment is extremely high, about 30%. Youth unemployment north of 40%. So green hydrogen is potential to address those social challenges. As from May this year, we've created about 800 jobs within the green hydrogen sector alone. It's ongoing. These are only at three different projects. We do have 9 projects in the pipeline, value of more than $40 billion US. But when it comes to maladaptation, I think this could be driven by policies and framework to guide how those infrastructures are operated and managed. In the case of water, for example, in Lodris, if we have to use desalination for green hydrogen from a common user infrastructure point of view, there's lots of benefits that could be derived from that, because that becomes an access point for other sectors to tap in. This could be whether climate smart agriculture within arid ecosystems, just to aid and complement what the green hydrogen sector is doing. This could be water for the town councils, the municipality itself, because this kind of infrastructure will be required to be expanded to provide services beyond green hydrogen itself. And if that is not taken into consideration, that's where the risk is. From a risk point of view of green hydrogen, I think the whole movement has reinforced the notion of public-private partnership. Without the public, it's extremely difficult for private sectors to come in, because they're looking for certainty, predictability on their investments, and so forth. As the public sector, what's extremely important to de-risk and to attract investment into that sector is really to come up with policies that incentivize the private sector. Policies that support, for example, market access, off-take agreements, government to government, bilateral agreements on how to access those markets. Policies that provide good enabling environment for example, guarantees of origin to monetize green attributes from all those kind of production systems, carbon credit, etc. I think from where we see it as the Environmental Investment Fund, we see that as holistic. And if we look at one part of the common user infrastructure, just around green hydrogen, I think that's where maladaptation can come from. But if we can use it in different parts of the sector, we do have an opportunity to address a lot of challenges.
Thank you, Benedict. Totally agree with you. And I think, Jonas, actually, because that's what you wake up in the morning and do every day. So if you could enlighten us more on the issue of clear policy and regulation to drive this sector going forward, and the work that you've been done. Maybe you can give us a few examples of enabling policies and tax incentivization that has helped to build the industry.
Thank you. I guess it starts at a principal level of making sure that we have the sort of appropriate aspects of that. And just one other example of that is the joint agreement of the responsible deployment of renewable-based hydrogen that Jabri, the UN climate champions, working with Brad, who's sitting here as well, have been part of, and that was a signing agreement ceremony of here and so on. Now, then you need to turn that, of course, into legislation and regulation. And I think that things like AGA, that are driven now, chaired by South Africa, as I said, Namibia, Mauritania, Morocco, Egypt, now coming in, Ethiopia, and a number of other countries, Djibouti are here. They're learning from each other. We've written up what does good legislation look like. I guess one of the things I would say there is we've got to be careful to think that it's one size fits all. It's got to be rooted in what's already there and the administrative departments and authorities that are already there. I do think if I can just flag one or two things that we're seeing that are so important. One is in this great rush, we all get it. The lawyers are rushing in to be supportive. We need them. We got to make sure that they follow good guidance in terms of transparency and accountability. And commercial lawyers are not always thinking of transparency as the way to go. They quite like to follow their companies in keeping things confidential. So high transparency standards, we got to push that, not least in countries, what we're seeing in places like Namibia. So important that we really do that. Another one, a key fundamental challenge when it comes to the enabling environment is we know about the subsidies in the US through the Inflation Reduction Act. We know about similar schemes taking shape in other parts of the world. Some of our countries on the African continent can't offer the same kind of incentives. We hear that, we understand it, it's straightforward. So the key question is what can we do instead? And the fundamental balancing act here, I'll stop, is how do we balance making sure, as you say, Bendik, that it is sufficiently attractive for the big developers to come in that challenging global environment in the short term, but sufficiently beneficial for the government and the revenue leading to development in the long term. That fiscal modeling is absolutely critical, and we're not doing enough of it. We are utterly delighted that the Africa Climate Foundation are supporting us on a small project on fiscal modeling, but we need much more of that, making sure that the fiscal terms for this enormous industry that we so desperately need in our countries is not leading to a kind of mining Zambia boom and bust experience, but to a solid development opportunity.
Thank you very much. Very well put. Jabri, I think where you can help us, and this is a great segment for you to talk to us more about, And summing up, what are the key enablers for the continent and global south, beyond the legislation, beyond the policy? And what your views are in respect of the cost of producing hydrogen within that framework?
Yeah, thanks, Catherine. It's a good question. My name is Jabri, and I'm in the Africa team of the 2 UN climate change high-level champions, and we have a UNFCCC mandate to engage non-state actors in meeting the goals enshrined in the Paris Agreement. So we work very closely with Jonas here and also the national governments that represent the Africa Green Hydrogen Alliance. But just maybe as the last speaker to also reflect and weave in some of the comments, the other panelists, Elumi, I really like what you said on who do I bet on as a pension fund. And that's also what national governments are kind of mulling over. Who do I bet on? But there's also what sector do I bet on? What's the end use of the hydrogen? And what will be the most valuable way to channel this emerging technology? So obviously there's been a lot of mention on steel, on shipping, on green ammonia, but there's a lot of criticism on hydrogen for fuel cell for cars that are not competitive with electric vehicles. So how do we channel this, and how do we kind of design the end use of this green technology to ensure that we extract as much value as possible, as much profit as possible? And also, like John, you mentioned the use of derivatives and consider exporting value-added products. I mean, embodied iron out of Mauritania is much more valuable to Mauritanians as opposed to exporting iron ore out and then you export hydrogen out. Why not create some value addition projects within the continent to, as an act of goodwill and solidarity? So that's really how to navigate regret sectors is so essential, especially in African government. You have limited fiscal space. You have other priorities that are not hydrogen electrolysis. So how do we ensure that the first sector that we really lean in on is the one that is most profitable, valuable, and can beneficiate not just companies that mostly are foreign owned, but also the peoples. And that's how I look at it within my institution. And also maybe there's a lot of discussion on the values that and benefits that can come out of hydrogen mitigation. Our study that we did with the Green Hydrogen Organization showed 4.5 gigatons of carbon mitigation coming between now and 2030 within the African continent. So there's a lot of mitigation value. There's also jobs value, and mitigation is also, reducing carbon is also, Africa has a stake in reducing carbon because we'll reduce our yields. The more our temperatures go up, we'll reduce our water access. So it's not just the adaptation, but all the 3 legs of the Paris Agreement are all kind of really at stake within the African continent. And maybe just to close off on how to ensure that the sector is as profitable and valuable, not just to private sector project developers, yes, I realize that, but also to African nations and communities is, first off, if I guess for African nations that are dealing with debt distress, foreign exchange surge, currency mismatch, that sort of thing, that is so prevalent across sub-Saharan Africa and also North Africa and Egypt, is selling hydrogen as a commodity in hard currency, and you can embed that within the PPA, hard currency export, long-term PPAs, and then to address those 3 issues, foreign exchange surge, currency mismatch, to then bring in some foreign currency back into the continent and address debt distress, because our currency is going down. The more the dollar hikes up, I know in my country, in Kenya, everyone is feeling the pinch, and it can lead to a lot of social unrest. So this could be a way, and the Africa Development Bank is looking seriously at how hydrogen as a commodity can address debt distress in Africa. And also, preferential market access is key. African hydrogen produced in the continent is not subsidized. It will not be subsidized, and it will be competing with heavily subsidized hydrogen. So if you want it to be exported into European markets, there has to be some sort of preferential market access. And it's been done before with textiles within the AGOA trade deal with the US. It has been done before, it can be done before as a climate show of goodwill between Europe and Africa considering also historical and colonial injustice, all these things within climate, there is a case to be made for preferential market access to decarbonize Europe. I'll stop there, thanks.
Thank you. That's very interesting. So I wanted to ask you on that. Are you seeing that's going to be the trend going forward, or should be the trend going forward in terms of how we deploy opportunities on the continent?
I think it has to be the trend. I mean, we are all setting up this market right now. It can be, it has been seen as idealism. There are a lot of asks for green hydrogen generation, the carbon standards, all these things that we are embedding within the sector is seen as idealistic. And also a lot of concerns around leakage, embrittlement, all these safeguards that we are asking to be put in place, especially on the non-profit civil society side, putting pressure on the sector. But I see it as an opportunity to build a new kind of model, and we can embed them right now before it becomes entrenched, like the oil and gas sector, and then you start twiddling with it on the sidelines. But if we start off really right and as best as possible, I think it should be the trend, even if it isn't.
Thank you, Jabri. Before we move on to the presentation we've all been waiting for from Joanne, and maybe this question can be answered in the presentation. We can start answering the question. There is a more granular view, and maybe your presentation will cover this, Joanne, of the upstream and midstream opportunities. Some have been mentioned already by the panelists, but maybe if in your discussion there you could answer some of those questions. Before we end off our discussion, one to think about for everyone on the panel is probably what is the key message you would like to provide to everyone listening today about green hydrogen? Not having to defend ourselves or deal with any misconceptions, but really the key messaging you would like everyone to be left with. So Joanne, the floor is yours.
Thanks. And so it's not a new statement I'll make, but I think it's an important one in the context of green hydrogen, that we need different thinking. So we need to approach the implementation and the partnering around green hydrogen in a way that we haven't done previously. There needs to be greater levels of collaboration, a different approach to understanding and thinking about risk, and a far more action-orientated approach of learning by doing. I think we wait for a perfect plan, Africa's opportunity will pass it by. Thanks.
So, Catherine, the reason I actually quite like these panels is that it really makes you think. I've just made like 10 pages of notes listening to my co-panelists here. And I started this presentation writing on the front page, there's capital markets out there of 120 trillion globally. How do we get some of that? And we've been talking about scale, yeah? It's big numbers. How do we make it big? It's bigger and bigger and bigger. When I listen to Joanne, it's actually about the impact of using it. How do you use a molecule? And to do that, you've actually got to make it small. You've got to follow what happened in the telcos industry, miniaturizing things. You've got to follow what's happened in the renewable energy, which started at scale and then end up on people's roofs, and it's now in people's cars. So I'm leaving here with the question of not how do we make it big, but how do we make it small? So it's at small levels and multiple smaller levels do you actually get the impact.
Can I borrow that one?
I think for me, if there's one message I want to leave with the audience and maybe the panel as well, is just thinking about how to retain as much value within the African continent and not just think about export premium. How do we retain profit, value, jobs, industrialization, goods, derivatives within the continent, whilst also exporting, benefiting from or exploiting export benefits. It's both, and it can be done.
Thank you.
We got clearly the technology now. We know roughly how to do this. There is so much money around in the systems, not least on the private pension side and so on. So it is fundamentally, as we have heard, it's about leadership. It's about doing things a little bit differently with a degree of urgency, not allowing ourselves to be captured by old fossil fuel-based economic thinking and interests in infrastructure?
Yes, from where we sit, and Andrew started it very well in his introduction. I think it's about satisfying our domestic needs as countries. That is very important and crucial from the Namibian context. Then the regional integration. How do we integrate with other countries in the region, with other programs, working with the SAP, for example, the Southern Africa Power Pool, working with other entities and partners, and then linking that from local, regional to global. I think that is extremely important.
Okay, a couple of things come to me from everything that has been said, and I almost end where I started, which is to say that there is on the continent a lot of work that we need to do on various institutions and on various items that require financing. So a lot of things need to get better. If you look at the electricity space, and this of course is energy intensive, there are huge challenges that we have. We are the only continent that in the next 6 or 7 years will still have 600 million people without access to power. So there's a lot we have to do. So when we think about any sector, the hydrogen sector or any other sector, we also have to think about things improving in other areas that join up with this. My last or second to last point is, and I love the way you mentioned it, anywhere that you need subsidies, anything for which you need subsidies, there is a universe of investors for whom that is not their space. So we have to think on the spectrum, and it goes back to his point about partnerships. Who is the party for whom this is their space today? Perhaps tomorrow the space will increase. And my starting point was that with respect to hydrogen, there is no doubt that in the future, that space will include. That space, I think, will get smaller. I don't think it will get smaller today. It will take time for that to happen. We have to have the patience to let it happen properly. And as you very rightly pointed out, it is important that we have the standards that allow it to happen so that when it happens, it's in our benefit and we're not spectators in our funeral. There are different financing sources that come into the equation. There are growth investors, there are investors who simply want to make sure that their money is there, which I think what a pension fund is, etc. And it's to recognize where people fit today, where they fit tomorrow, and where they fit the day after tomorrow. I thank you.
Thank you. Thank you very much. We have a few minutes for questions, and then, Joanne, if you still have some time, we'd like you to present your presentation. Any questions from the audience? Thank you. Please get the mic. Thank you.
I'm Jazar Dawoodi from the Swedish Energy Agency. I have a question to you, Jonas. You said something very important, to make the projects sufficiently attractive. That's the key. But I'm sorry to say, it's easy to say. Can you elaborate a little bit about how? How can we manage to do the project sufficiently attractive for investors and governments? It's a key, but I think most of people are lost. It's very challenging. Who is willing to invest in a technology that has been around for years, but in small scale within the industry, and now we are opening up for having hydrogen everywhere? It's very expensive, it's risky. Most of the projects are more or less PowerPoint materials. If we manage to get them interested and willing to take the risk, we will reach the goals. Please elaborate a little bit more.
Well, that is a big question. I guess the panacea would be carbon pricing that is proper. If we charged for carbon emissions, it would all be sorted out pretty much overnight. But we're not going to see a global carbon tax. But there are carbon taxation schemes now popping up all over the place in one way or another that are contributing to patchwork that is making it possible. That, I think, would be my first point. Then we come to the enabling environment. And there is so much we can do to, as I said, to structurally de-risk these projects. I think that we will certainly need various forms of maybe not just so much blended finance that Andrew spoke about, but innovative climate finance solutions, where our credit agencies and the multilateral development banks, some of these here, go very long, and institutional private investors take a shorter obligation. So I think that we can mix guarantee instruments provided by our guarantee agencies, by MIGA and so on, with more commercial de-risking, if you like. So I think that it's across the value chain, so many different things, and we got to do all of those. There isn't a single answer in that sense, and I think that, as I've also said, doing it responsibly and so on form part of it. We are currently in touch with a number of the AGA governments, in particular, no secret here, with the Egyptian government, with the Mauritanian government, that are putting in place laws that provide quite significant incentives to attract these. As I've said, the key is to backstop that, to go home and do the work on the government side, fiscal modeling, making sure that it's good for the companies in the short term so they come, good for the government in the long term so it brings the development we need.
Jonas, Catherine, could I have a go at that one very quickly? It's a great question. I think my response would be attractiveness is in the eyes of the beholder. So who's actually looking at it? And I think there are four parties. There's value in the doing, there's value in the content, there's value in the use, and there's value in the financing. We'll gravitate to the financing, but let me unpack that quickly. I think the value in the doing is actually building it. So that's construction companies who will invest because they get to build stuff. It's governments who will invest because they get to create jobs. There's value in the content. The molecule itself is worth something. So traders who buy molecules will invest because they want the molecule. Governments will invest because they want the molecule. There's value in the use, which we're going to hear from Joanne. There's industries that actually use the molecules, and they will invest because they're going to use that molecule for beneficiation into biofuels and the likes, or rather chemicals. And then there's value in the financing, which is people will provide capital because they're going to get a return on it. If one strategically separates those four value perspectives and you positions the assets in the eyes of those beholders, then I think you can aggregate them in a combined way.
That was very helpful. Thank you. I will bring it with me and apply it to Sweden. Thank you very much.
Thank you. I also heard on another conversation that where the IDC actually was hosting us, a great example made by one of the audience members that said that the cost of the impact of climate change and the cost weighing up the cost of investing in green hydrogen needs to be weighed up, and the former is much higher.
Thanks. And I think, I'm also happy to forego the presentation because I think that the conversation is more valuable than me talking at you. But on the whole value question, and I think this transparency is absolutely key to ensure that we clearly identify the value that can be and is created through the ecosystem. And this fiscal modeling, I think, becomes a critical enabler of identifying where those benefits actually lie. But to talk to some different thinking, also an example that I often give, stolen from Anglo. So Anglo-American, when they were looking at decarbonization of the Mogalakwena operations, they saw that the investment in renewables did not meet their corporate return on investment. They then thought it doesn't need to meet our corporate return on investment. We're not doing this to grow the business. We're doing this to sustain the business. So if it's purely not a value dilutive, we should be doing it. So at a break-even level, it's a good investment decision for us. And having made that decision, it sustained operations, generated more electricity than they needed, which gave them a business case for green hydrogen, for the green hydrogen vehicle. So we need different investment models and different ways of thinking in making decisions for the future. So how do we do the economic modeling to better define where value lies? Because as a continent, we keep saying there isn't the fiscal capacity to provide incentives. But what is the fiscal opportunity, and is there in fact a fiscal incentive that can be offered in order to unlock the enormous social and economic potential that hydrogen presents to the continent? So I really do think that we need different level of skills and modeling and analysis that will redefine value in the economy.
Thank you. Any more questions from the audience? Thank you. I think Joanne has decided to give up on our presentation.
I'm happy to do it, but I also know everyone's got long distances to walk.
No, that's fine. Thank you so much. I think the insights we got today from these discussions are a lot to carry with us. And perhaps the next COP will talk about actual projects on the ground that have taken off and money that's been disbursed. Thank you everyone for joining us today. Appreciate it.
Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond.
I was hoping that Illuma would...
Consists of South Africa, the chairmanship of our
What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment, and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhance collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the coming Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the coming Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the coming Montreal Global Biodiversity Framework. Our goals: knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the coming Montreal Global Biodiversity Framework. Our goals: knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities, In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? the International Development Finance Club.
Good afternoon to you all, and a very warm welcome to this workshop on how to accelerate PDB engagement, so the engagement of public development banks with climate-related issues. My name is Claire Richalier. I am the head of the Mainstreaming Climate in Financial Institutions initiative and also team lead at the Institute for Climate Economics. So this event has been co-organized by IDFC Climate Facility, E3G, ECF, and Growald. I think with the idea of providing some insight and trying to identify some priority topics for public development banks to maximize their engagements. So we've got quite a dynamic discussion plan for today. It's going to be separated into two parts. The first part, we're going to be hearing from some experts who are going to be presenting some of their latest research on the needs of public development banks. And then in the second half of the discussion, we'll be having a conversation with practitioners so that they can tell us a little bit more from their view about what they need. So without any further ado, I'm going to be starting by passing the floor over to Edgardo Alvarez, your General Secretary of ALIDE, the Latin American Association of Development Finance Institutions. And so I'm very honored to be letting you do the keynote for today.
Thank you, Claire. Good afternoon, ladies and gentlemen. But let me call you friends, because this COP and all COPs provide you something. You get in touch with people that you normally know just by email, and now you have the opportunity to face them, to talk with them, to really be in touch. So it's really good, because of the COVID, we began to work at home. And a lot of people prefer to work at home. I don't want to be at the office. But you can miss something that is part of our natural, from our nature, which is to be in touch with people, to talk, to smile, to get in face, to look at the face. And if we are bankers, I'm a former banker for my whole life, and now in the ALIDE, Banking Association of Development Banks, you need to see the face of your client in order to see if he's going to pay to you or not. So it's something that you can see with this, because I can't provide any worksheets and balance sheets and flows and everything. But you do need to know the character of the person. And to know the character of the person, you have to meet in person. Until now, I don't know. The artificial AI intelligence could do something. But I don't think it could do much better than we do with all the centuries of living. Well, just talking about what we're talking, you know, I don't have to say, climate change is a really threat that knows no borders, and which all of us are exposed. For that reason, the PDBs are taking the role they have to take. It means leading and taking the responsibility of raising funds to lead the transition, because in all these meetings, I just lost the quantity, because some people say millions, trillions, I don't know, but we know that there is needed a lot of money to get what we want. And we have recently been witness of the devastation through the extreme climate events in Latin America. We see the drought in Argentina. They didn't have water. It happened the same in Uruguay. They couldn't have clear water, so they have to mix the salty water with the natural water. So it's amazing. The Hurricane Otis in Acapulco. Acapulco was extremely nice and beautiful, and suddenly the hurricane appears and everything was destroyed. And finally, the torrential rainfalls and flooding in Dominican Republic. And this is something I can't tell you because I was there. I was during this bloody Sunday in a wedding, and I could see all the rain coming, and I see the cars floating in the streets, and even one car was crashed by a wall, and I just passed from this avenue 30 minutes before. So it could happen to anyone. So even that you are here, that you do live in Europe, you could be in any part of the world, and you are under attack. Really, our continent, our world, is under attack of this climate change. So that we urgently need for switch to measures, as well as the commitments that the development banks has adopted to contribute even more decisively to the fulfillment of the goals of the Paris Agreement. This means not only raising more funds for climate investments, but also ensuring that the money goes where it's tuned to objectives, particularly for the goal of reaching zero net emissions. No? The PDBs face these challenges, and they are structuring the instruments of public policy of and they are an instrument of public policy of our governments. So this is a very good thing, because the PDBs are the financial arms, are the people that normally in the government they say we are the bad people of the family, because you are the no, it's not possible. It's not possible because everybody asks you for money, and the PDBs there's no money for everything. So you must do something, and you must prioritize this. So the PDBs are striving to take a compressing a collaborative approach. We are well aware about cooperation among banks. We've seen this. I've been in this room 2 or 3 days ago. I don't remember exactly. It was 3 days ago. And it was extremely nice because we work with people from France, from Germany, from all Europe, and well, you had the voice of Latin America. And it was extremely nice to know that all of us, we have the same thing in common, the same problems, and we face and we try to work in the same way in order to get to the goals that we have. I'll give you one example. In Latin America, we are making under the Green Coalition for the Amazon. It's an initiative that gathers multilateral banks from the Amazon region. It means from Brazil, Colombia, Peru, Bolivia, and Guyana, and Ecuador. So the idea is that the development banks will work and try to find a better solution for the Amazon. And one of the words that Aloisio Mercadante, the CEO of BNDES, who is leading this coalition, said, okay, we know we need more oxygen, so let's plant more trees. But don't forget who's under the trees are the people. So we don't have to forget the people. And we don't want that to do something for the people living in the Amazon, to do some other experience. So take them away, buy their land, and after this, what are they doing? We're not working for people, and we, the PDBs, our first initiative is to work for the people of our own countries. So this is something really, really important to do. Well, let me mention some aspects we must fulfill as PDBs in order to get to the climate finance commitments, no? You must get involvement and commitment of the senior staff and the government bodies of the PDBs. If not, you are nothing. It's something in the morning we have a very nice breakfast. And it was one of the points we mentioned. We must incorporate environmental and social risk management systems within bank decision-making process. If you don't have this, you are just talking. But we must have tools for monitoring and quantifying emissions in the projects we are financing. We must define a clear portfolio of decarbonization strategies, and we must strengthen the capacity buildings. As you know, 20 years ago, the PDBs, or at least I know, I'm talking for a while now. In Latin America, we have people that knew how to analyze projects, how to develop projects and this. In the 90s, they were taken out. So we lost this capacity. Now we must begin with the capacity building of this, because I've seen projects analyzed by banks, like the commercial bank. I've been a private banker, a commercial banker, and I know if you are a commercial banker, you just see the balance sheet and you see, okay, the ratios, and you pass. But for a project, you need more. It's not because you're looking at the future. You don't know what happens. Is how I told to the people that I used to work, how long it takes you when you drive, how long you look at the mirror. Do you know? How long? Tell me, 1 minute, 10 minutes? Well, almost nothing. Because you're looking on the future, you're looking on the road. If you don't look on the road, you crash. And it's exactly what happened. When you're analyzing these projects or these balance sheets, you are looking at the past. And not only the past, you are looking at the dressed past. Because when I've been also a commercial finance manager for a company. When you go to the bank, you present the papers. And you present papers on December, each trimester. And obviously, you try to put the best figures on that. No? It's like, what is nice is to see the persons when they wake up without makeup and without anything. And this is something that we as bankers, we need to, and we need with the projects also. And more in projects because you are facing the future and you don't know what's going on in the future. You see this beautiful city. It's beautiful. But 3 weeks ago, it was flooded. Because you don't see, unless I haven't found places where if there is a lot of rain, where the rain goes. So they are not prepared. Well, if it happens once in a while, there's no problem. But what happens if this once in a while happens each month, each year, each week? You are going to have problems. So we must think in the future what's going on, what are the threats, and we must work on that. Well, we must align the public policy with climate taxonomies, of course. We must dispose the appropriate financing sources in terms of cost and quantity. It is something that we will always talk about this, the opportunity and the cost and how it gets to the lower projects. Last but not least, we must attract the private sector. We were talking about the private sector in the morning. Everybody wants to receive money for his investment, so we must have a balance on this. 2 days ago, I was talking with a friend of mine. Oh? Do you know where the money now is? It's in the private sector, obviously, but who has the money? The money is in the hands of big companies. I better know. Well, big companies that receive funds from everybody, from the funds, from your pension funds and all this stuff. You must know there are 2 or 3 companies, big companies. And they invest, and they must have some kind of policies regarding to this. If not, we are not going to get what we want. And finally, we have to have better coordination with governments, agencies, and regional bilateral like you, and multilateral financial institutions, because if not, we don't get the same. Well, to conclude, we know there are no easy things to achieve the objectives of decarbonization, reduction of emissions and commitments, and goals like this that are established in the Paris Agreement involve cost. But we know that future benefits will be far outweigh them. And for that reason, let's make climate finance the driving force for our efforts. Thank you. Thank you, a green and positive journey, and together I think we could do more. Thank you, my ladies and friends.
Thank you very much, Edgardo. I think that was very, very inspiring, and thank you for putting the people back at the center of our conversation for today, not just because they're the most affected, but also because I think we collectively are all actors of change, and I think that's why we're going to hear now from some experts who've been talking to these people over the past few months and few years even for a lot of them. And we're going to jump into today's discussion, with Laura Sabogel, your Senior Policy Advisor for E3G, Public Banks team, and you'll be presenting some of the work that E3G has been carrying out on alignment with public development banks. The floor is yours. You have a presentation? Yes. You can start.
Okay, perfect. Thank you, Claire, and thank you once again, Edgardo, for those inspiring words. Indeed, as Edgardo very eloquently put it, we're facing a mammoth task. It's a titanic reformation and rethinking of our systems in order to enable countries to have a fair transition where the people and the planet are also at the center. Here at E3G, what we have been doing, E3G is, for those of you who don't know us yet, we are an independent climate change think tank. We work across the board on all things climate. I specifically lead the work around Paris alignment, and our goal is to help the 500 plus public development banks in the world become climate champions. So in the spirit of this work, we have been working very closely with some IDFC members recently, and this has been going for a little bit of time. So we started in 2018, originally in the shape of a report called Banking on Reform, where we took a look at some different multilateral development banks to try to understand what it meant to be Paris aligned. This was only 3 years after COP21. I must confess, I was not there, but from what I understand from my colleagues, it was a very confusing moment for public development banks because suddenly they were asked to be Paris aligned in their financial flows, and most of them didn't really understand what that meant. And that's the origin a little bit of how this first report came to be, where a methodology was developed. And then we had, in 1 year later, a sequel of this event, of this report, focusing on development finance institutions in Asia. And then in 2020, we realized that the amount of information that was required, and that actually one of the main things that we could contribute to was precisely that, collating information, collating, benchmarking, providing best examples to other banks. That would be a helpful thing. We decided to launch our tracker. So we actually made these 2 reports. We translated it or transferred them to our website, and we made it a living piece of work. So that's where we stand right now. And since 2018, we have done a lot of work. We have more than 15 banks already in the matrix. And now we are currently undertaking the assessment of FMO, the Dutch Entrepreneurial Bank, as well as the Central American Bank of Economic Integration, KBI. I've been working very closely here with Evelyn, and it's great to see her in person after so many months of Zoom calls. And we are also working on other IDFC members, supporting them in this process, thanks to the generous support of the IDFC, of course. So there's a wealth of information. The matrix actually looks at each of these banks across 15 metrics. For each of these metrics, we have 4 categories. So banks can be ranked anywhere from unaligned all the way to transformational. And we have defined very clearly what does it take for a bank to be there. I think one of the main things that I want to emphasize here is that context really matters. It's not the same to discuss Paris alignment with a multilateral development bank that might be, for example, in Europe, where it has a very robust policy framework at the national and supranational level to support its efforts, that we were discussing what a national development bank is doing in a developing country. So I think context really matters, and we really try our best to integrate at every single part of our evaluations and this analytical process that understanding. And I want to share with you some of the lessons learned that we have had and we have collected over these past 5 years. The first thing is that progress on Paris alignment is not evenly distributed, and it's not even linear. We have seen, for example, that external conditions can change really fast. We had seen the European Investment Bank make a total pledge to phase out fossil fuels. And when the energy crisis happened, we saw a very fast change in the position of some member states of the European Union to revert that decision. That didn't happen, but that shows us that the Paris alignment path is not always linear. And neither should it be, because it's very important to say that context matters once again, and it will not look the same for everyone. There's not one specific pathway that will, copy-paste. The World Bank will have to take a different path that CABE, for example, will do, the national development banks, and so on. And here I want to emphasize what Edgardo was saying. Collaboration is absolutely key. Coordination is absolutely key. And I'm very happy to see at this COP the launch of new ways of collaborating, such as, for example, the MDB joint country platform approach. These are ideas that are still pretty early on in their thinking, but have a lot of potential, and national development banks and bilateral banks have to be a part of that conversation. Paris alignment, so for those banks that started this process, so multilateral development banks, those were the first ones that were called, let's say, to report. No, they were the first that were put on the spotlight. Since 2015, we have now reached a stage that the joint multilateral development bank group have a joint Paris alignment methodology, which they are using for all of their investment decisions. And even more than that, some of them have gone further. For example, the Inter-American Bank of Development, the World Bank, the AIIB, the Asian Infrastructure and Investment Bank, also have developed their own methodologies. So we are seeing that we actually now have something more tangible. No? Like now it's actually a little bit more clear what does it mean to be Paris aligned. It's no longer so, somewhere an abstract concept. And of course, this is bringing a lot of challenges, no? Because it's one thing, the political signals that we're seeing, and we are seeing great things happening, no? Like we saw President Ajay Banga from the World Bank announce that they're raising their climate finance target to 45%, which is great. But how does that actually translate at the operational level? And this is where I think a lot of work still needs to be done, and where there needs to be a lot of collaboration, because of course we need to tinker those methodologies, and there's still room for improvement, although of course we recognize that this is a great step. And here I want to say that we are progressively moving onto a more difficult task, but a very necessary one, and I want to highlight the work that IDFC has been doing in this. It's one thing to discuss Paris alignment in the context of multilateral development banks that have many more resources in terms of staff, analytical capacity, resources. They have a broad set of shareholders that they can draw from. The story is very, very different when you look at national development banks in developing countries. They only have one stakeholder, their government. They have to answer, of course, to the needs of the people. And I think it's super important to highlight, we cannot, there's been some tension in the debate of the reform of the international financial architecture in terms of climate and development. And these two things, they cannot be pitted against one another. They're both incredibly important. So the analogy from the head of the BNDES, I think, is very pertinent. And because of this, it's really important that the banks that are further along in this path help the banks that are just starting, national development banks, subnational banks that have less capacities. So it needs to be a joint effort. And with that, that also means for our work, some questioning, no? What does it mean for us? We started this exercise in 2015, and now we also need to rethink how we go about our work. In the case of the multilateral development banks, it has an element of scrutiny, of course, and transparency. In the case of national development banks and the work with IDFC, it's really about supporting them in that process and using the information that we have collected over the years. So I'm not going to bore you with this, but this is some initial thinking that we have been doing, essentially a lighter version of our methodology with the metrics that we think are foundational, because you need certain things that will enable you to go further in your process. I'm very happy to discuss some of these with you. But I think the fact of the matter is that this process will require a lot of, like I said, collaboration, hand-holding, and we are very happy to be in this process and helping this thanks to IDFC. So where next? There's a lot of things that need to be said, and we're going to release a paper. We just released a paper with our partners from the Climate Policy Initiative on Paris alignment differences between multilateral development banks and national development banks. And some of the findings that we made is that different institutions have different results and pathways, and those are mainly influenced by a series of different factors that include their political economy context, their institutional capacity, as well as their distinct mandates. And yes, this morning we were in this nice breakfast that Edgardo was making reference, and that was confirmed by different stakeholders that were there with us. And in this context, E3G has partnered with IDFC to support its broad range of members. It's 26 institutions. There's massive institutions, small institutions. And here I want to share a couple of very small things of our first institution, which is CABEI. We are in the process of finalizing this analytical work that will help them, and we are in the process of structuring what that roadmap looks like. Like I said, progress is not linear, nor is equally distributed across aspects. And here it's really important to mention that just because a multilateral development bank has more capacities, it doesn't mean necessarily that it's performing better. And CABEI has proven that. CABEI, I want to highlight some of the great things that they're doing that some of the bigger banks are not even there yet. CABEI has a best practice in terms of their accounting methodology for greenhouse gases. They actually go all the way to scope 3, which is, I think, incredible. CABEI is also a leader in its issuance of green and blue bonds in the Latin American Caribbean region. That, of course, is much needed to crowd new sources of finance. It has very clear integration of climate in its sectoral strategies, which, again, is not a given. And finally, and I think this is really worth highlighting, they have a very robust inclusion of the notion of transition finance, which is particularly relevant for the continent and the, let's say, member countries where they operate. Because, again, the transition needs to occur. So the bottom line of this is that what we hope this exercise will help with CABEI, and this is actually the reason why we're doing it, is to help them, provide them with a snapshot that will be used as input in order for them to chart their strategy. The findings show that they will need more support, and Evelyn will tell us a little bit more, but this at least will help with the prioritization, and we hope that all of the information that we have collected over the year, of all of those recommendations that are evidence-based, will be helpful in this process. Thank you.
Thank you so much, Laura, for sharing your work and reminding us, I think, that it's a journey, that we're not all starting at the same place, we don't all have the same constraints, and I think what we like to see at the mainstreaming initiative is what matters the most is the ambition, probably not so much the results or the way you take to get there. So thank you very much for sharing your work, and I'm sure we'll hear a little bit more about that also with some concrete examples a bit later on during the panel discussion. I'm now going to pass the microphone over to Mustafa. Mustafa Kleischer, I think pretty much everyone in this room knows you, but for those who are online and who might not know you, you're climate facility expert for the IDFC, and you'll be presenting some of the work that you've been launching recently on empowering PDBs in sustainable energy.
Thank you, Claire. Good afternoon. So I am Mustafa Klesh from the IDFC Climate Facility. I don't know if you are all familiar with the Climate Facility, which is now the Climate and Biodiversity Facility, because we included that since last year. The role of the Climate Facility is, in fact, the operational arm of IDFC, helping members to increase their capacity in climate finance, but also in biodiversity finance, in nature finance, I would say, in general. We've provided some support on knowledge sharing, on capacity building, and also trying to help members to seize opportunities of international finance and also on different sectors. So what I'm going to present you here is just one program where we just started, in order to help members and helping PDBs in general on the energy, which is energy is a very important issue. And we have, as you know, we have to deliver a lot for that. And the idea is to on the period basis, to try to see how we can help members at the early journey to integrate energy policy and to make their first operation in the per se on the sector. Next slide, please. Sorry, I have it here. Okay. Just to show you this figure, I'm not going to be very long or very technical, just to give you some snapshot of about the situation we have in energy. Just to show you here, what are the challenges before us? As you can see, this is a very recent publication from McKinsey showing for Africa, which is maybe one of the most promising continents in terms of energy, what are the needs for investing in energy. And you can see that for the different kind of energy, hydrogen, mini-grid, power transmission, and renewable energy, that's only for before 2027, we need to invest more than 300 billion euro or dollars to get there. I mean, to meet the Paris Agreement goals. I'm not talking about at the end, on the right end of the slide, what we need to invest for 2050 to get net zero. It's about $3,000 billion to get there. So a lot of money to be invested. And when we say that that we have to do a lot of efforts, it's really a big effort. I'm not talking about Latin America, I'm not talking about other continents, just for Africa. But the good news we have here is that, and you can see that this renewable energy is not anymore a dream of some technicians or experts dreaming about a world with renewable energy. It's really coming true. As you can see, for example, in the case of different continents, because as we have now is in EU, in US, and in China, this is really going very fast. And you can see this exponential growth of investment in those countries. We never have seen that in the past. So this is a very good news that it could happen. If somebody who would say to you that 20 years ago, I think that we haven't believed it. So now it's coming true. And you can see, for example, the electrical car in China, it's more than 25% of the new cars are electrical cars. And this is very new. It's just the last 2 to 5 years. And this is also the case for solar and wind. So this is one first good news for Africa and other continents, is that we have now examples of very rapid growth of energy investments. The second very good news is that the costs are going down. You can see here for the solar and the wind that the costs are decreasing a lot. So there is no anymore justification of saying, we used to say that renewable energy is very expensive. So we realize today that this is not a good justification, because we have now the cheapest cost in the history, but it doesn't mean that we increase the investments on renewable energy. So it means that reasons are elsewhere. So we have to identify these reasons, these constraints, and to see how come that these costs are as cheaper than, for example, for the nuclear, for the coal, or for the gas, and even we are still investing in those fossil fuels. So this is where come our program, just to try to see how we can take the opportunities of the trends that is going on the different continents, on Europe and US and in China, and also the costs that are decreasing. So there is the technology, there is the investment. So now we have to see how we can implement that in those continents, on this area where it's still lagging behind. So I think that's the first thing we can maybe talk about is that for PDBs to take the opportunity, we cannot, in the past it was very easy to say that I'm going to finance some few pilot projects, one from here and there, one wind, one solar, and without having a strategy, without having a vision of how to do that. Because it's not the same to finance, for example, off-grid or on-grid, to finance a private company or public company. So these things should be put in a strategy. So it is important to have a policy, an advisory also capacity for helping the clients to define well their project. So this is the first piece of as condition for maybe banks and any stakeholders to enter this market is to have a clear vision of their role, of their added value on what they can do in this sector. The second is to have a technical assistance. As we know that this is very important because what we know is the renewable energy is a technology which is not easy. It is a difficult one, new one. And also what is important is that we have small actors. If we compare, for example, for the fossil fuel sector, industry, you have a big majors which have a big, I mean, no bank will refuse to finance Total or BP or Shell. It's not a problem because they have 70 or 80 years of experience. They have a big balance sheet. And for a bank, it's wonderful. No need to have, I mean, the risk is close to zero. But what we have in the renewable energy is small companies, small, having very short track record, a maximum of 20 years of track records, very small balance sheets. So we need now to finance them on the project finance scheme, which is more complicated than on balance sheets. So this is something we have to, so this is why it is important to look at all this risk and to provide them some support. So technical assistance is really very key to help these actors to improve their projects. The third thing, which is most important, but it is also, my point of view, it's consequences of the two other, is project and investment. But without having a policy, without having a capacity to help the stakeholders, it's very difficult to have very long-standing activities in this sector. Maybe I have to accelerate. Sorry. So the objective of this program is really is to increase the pipe. At the end, what is the most important is to increase the pipe of projects of investment of sustainable energy finance. Just not talking about renewable energy, but also about social aspects, economic aspects. So this is why we talk it sustainable energy finance. It is an important aspect to not leave behind people on this project. The second is to enhance capacity of PDBs, whatever they need, to be capable to discuss, have a dialogue with their government, and to improve the institutional framework of the sector. This is important to have this capacity. And to increase also to help the local players. And this is important for the banks to play this role of coordinating the different stakeholders to ensure that the pipeline of the project could be at the good quality. So I'm not going to enter the detail of this theory of change. It's true, maybe just to tell you that the activities we will have is really to help the banks in analyzing their markets, and also to provide them some technical assistance, and maybe also in terms of organization to help them to define what is the best to deliver. And this is a program that is funded by Growalt, and we are going to make it on the pilot basis for a very small number of banks, with the idea to scale it up once we get something which we think it is good for to be scale up. I stop here, and thank you for your attention.
Thank you, Mustafa. You were right on time, and I'm sure you'll get some questions after this event on your theory of change, and some people that will want some more information on what it contains. And we're going to conclude today's introductory presentations with Luis, my colleague from I4C, project manager at I4C, who'll be presenting some of the great work that actually another institution has been carrying out but isn't around today, the New Climate Institute with RENAC. And he's going to be presenting some of the scoping study and a diagnosis that they've been carrying out on some of IDFC's members to identify where the capacity building needs are.
Thank you, Claire. Hi, everyone. So, I'll be presenting this for, as Claire said, for New Climate and RENAC. So it's a program, it's the first part of the first phase of a program that sought to understand the needs and the gaps from the PDBs and the IDFC members. This is the draft program for the Climate Finance Fast Track onboarding program. The first part. Right. Okay. The first part of, so the agenda, the first part is the survey and the interview results that I'll present very briefly to give an idea of what has been the answers from the PDBs. The second part on the theory of change, which is slightly simpler than Mustafa. And the third one, the proposed assistant program and the elements of format of the program. So on the interview results, I think it's important to say that eight banks participated in the interview. The very, very important part, I think, it's which climate measures have the banks already undertaken. The most answered, the highest amount of answers we get with collaboration with other development banks, which probably reflects also the fact that they are answering this report. But also the integration of climate considerations in environmental and social policy. But then the very important part, what they have not included in this so far, and this have been we have a climate strategy, so only one bank answered that, and only one bank also answered we have set a quantitative climate finance mobilization target. So this becomes somehow the focus, one of the focus from the study, but of course there are others. Other barriers to setting up a climate strategy, the lowest one, and then here it inverts, the lowest barrier is limited capacity in terms of financial resources, these are banks, but the highest one is limited capacities in terms of human resources, and also coming right after the limited understanding of climate risks and opportunities. This is also reflected in the main barriers to assess and manage climate risks, which the main barrier is a limited capacity in terms of human resources. So it's very consistent, the fact that we need to hire people, we need to train people, which also reflects on the need of this program, on the relevance of this program, the IDFC program. But then also the main barriers, the lowest ones are very similar to each other, which are limited understanding of what is needed, of available tools and technical resources. So somehow, even though these are not high on the answers, it's also some needs that should be addressed. Going forward, the main barriers to scaling up financing of climate mitigation activities. The lowest, actually this is the same for both, for adaptation and mitigation activities, is a lack of mandate. So the banks do not see this as a main barrier, but then they understand the difficulty in identifying suitable projects for mitigation as a very important one, and for adaptation, inverting a bit, the difficulty in identifying and the lack of suitable projects become the main one. How do you currently identify climate finance opportunities? The main two ways actually are engagement with local communities and market study to understand demands and needs. And the main barriers to mobilize private climate finance are the limited technical knowledge and coming after lack of human resources. I'm going into the theory of change, which is so the main point here is to understand first to bring these pilots of IDFC with this project, and through this is to raise awareness among the pilots to increase climate financing volume and participating banks on track to reach 2030 climate targets. The next part, the next phase of the theory of change would be to roll out this to interested IDFC members. Here, the club contributes with full capacity to meeting international climate goals, and the IDFC significantly exceeds its climate finance target. And then finally, the idea is to blow this and maximize the impact by bringing this to all other interested national development banks, and then bringing them up to speed on this. An overview, and I'm going a very overview, kind of brief, but the idea here is of the program is to start with a self-evaluation of banks. This is very important, also building on what Laura said, context matters. Like we have to understand what is coming from the different countries and what the banks have the capacity already or what are their needs. And this to build two parts. One is a general training, component 1, and this is mostly theoretical. And then the component 2, which is a bank-specific assistance, which goes a bit more into the practice and trying to respond to the specific needs of each country and bank. The first part is on the self-evaluation. The objective is to, well, as I mentioned before, is to identify the needs of each participant, and specifically to assess current climate relevant activities and processes that they already have or they might need, assess current state of financing of climate mitigation and adaptation activities, and the third, reporting and disclosure. From the self-evaluation, the first part is the theoretical one, the general program, the component 1. The idea is to build awareness and create knowledge and some topics that have been out there. And I think this is where the collaboration between banks is so important, because some banks have been doing this for a while. Some MDBs have been evolving these practices that should be spread and shared with others. And this is part of what we'll build into this first part of the first component of the program. So coming from general introductory modules on taxonomies, support mechanisms for FIs, climate finance instruments, carbon trading, the different instruments that are out there, to building a climate finance framework with geo-accounting, key principles and concepts, and ultimately going, this is still the general program, to the specific training of the general program. So introduction to different mitigation and adaptation relevant sectors. So energy, agriculture, transport, water, and other green financial products. And finally, an introduction to climate specific market studies. So this builds the first step for the last part of the program, which is the specific one. The specific tailored program goes into the member-specific guidance and support on implementation of climate finance activities. These builds on specific climate finance in the country, the needs in the climate finance in the country, the climate finance opportunities in different mitigation and adaptation relevant sectors, the assistance to build a comprehensive strategy, and capacity building, basically, for building these market studies and identification of projects. The last part is the specific training, so the second part of the tailored program, which is an assistant module to accompany the first operations and an assistant module to set up a climate appraisal process to assess the first operations. It's important to say that all of these will have a very mixed type of trainings, so it will be through online trainings, in-person training, workshops. In this last part, it's expected to have some specific assistance, so real getting in contact and seeing with the banks directly what is needed at that point, and trying to develop that in a tailored fashion. I think this is, so on the way forward now, there is a call that is to develop the second part and to implement this, and it's to be seen. This is coming later. I think Mustafa can talk a bit more of that. Yep, please, Mustafa. Oh. Or maybe. Yeah, I can hear, you know.
Just to say that for this program, we launched the call for proposal, and we received 5 proposals. So we will create, it's a mix between think tanks and consulting firms. 4 banks will attend this, will participate to this program, CDG here, and we have also BC online and colleagues from CDP, and 1 non-IDFC member, which is IDC, a bank from South Africa. All these 4 banks will receive the assistance for that. So as we're saying, a direct and indirect assistance. With and this is also a pilot-based program. The idea is also to take lessons on the implementation of this project and to make it available for every other PDBs. And thank you, Luis, for that presentation.
Thank you, Mustafa. And That's it. Thank you all.
Oh, thank you, Luis. Very excited about all these different programs that are kickstarting, already ongoing, and I'm extremely excited to be hearing from the people, the actual people that will be benefiting from them. So I'm going to, I think 2 of them are going to be online, and 3 of you are in person today. So I'm going to maybe ask you to come and sit here with me, if that's okay. Online, I believe we have Bise. Paula, you're, I think, Head of International Relations and Sustainability. I hope you can hear us. We also have from Ghislaine Nouril from the Caisse des dépôts et gestion du Maroc. You're with us here today. From CABE, also with us today, Central American Bank for Economic Integration. We have Evelyn Maria. Thank you very much for being with us. You are climate expert at the Office of Social and Environmental Monitoring. We're lucky enough to have from DBSA Olympus Mantata, Director of Climate Finance, the Development Bank for Southern Africa, sorry. And last but not least, from the Croatian Bank for Reconstruction and Development, online with us too. We have, and I hope I'm going to be pronouncing this right, I haven't had a chance to ask you, but Drazenka Kostelak, Advisor to the Management Board. I hope you can both hear us properly. Maybe we can sit down if that's okay, and we can start the conversation together here. Thank you. Yes, can you hear me? I think, I think it works. We need to keep it close to our mouths. So we're going to ask you a little bit to provide some concrete experience and examples after what we've just heard, all these different supports that are ongoing and that you might be receiving. We'd like to hear back from you on what these are, how these are helping you, and how these are making you change your internal organization. So we've asked you a couple of questions. I think we're going to start, if that's okay, with Bise. Paula, can you hear us correctly? Yes?
Yes, excellent. Yeah.
Good, great. Paula, I understand you've expressed interest to take part in the pilot phase that Luis was just presenting for the Fast Track Onboarding Program, which is about to be launched by the IDFC facility. I was wondering if you could please share with us some of the reasons why you think this program might be of interest for you, maybe reflecting on the benefits they could have and what the needs you have internally as an organization are.
Yes, excellent. So as well, many of you may not know, but BICE is a national development bank, and we play a key role in Argentina driving sustainable economic growth on the country. So as Edgardo Alvarez was mentioning at the beginning, most of national development banks, we don't have only to accompany, or not only to finance green projects or green finances, but also we have promoting proactive investment and supporting our companies to expand to develop foreign trade. So it's a mixture of both of these things. So in this sense, we are knowing this growing awareness internationally of the challenges that are globally, the need of transition to a more sustainable economic model. As Edgardo also was mentioning, the drought we had in Argentina was really big last year, and it was this year, sorry, because it was 2023. We are almost finishing, but we're still on 2023, and this is urgently shifting the transition to a more sustainable economic growth. So it was important for us to participate on this program, because we have not only the importance of becoming a greener or more sustainable bank, but also we as a development bank, we have a key role to translate this into the whole financial system in Argentina. BICE plays a really key role as a catalyst and facilitator in the transition to these sustainable financial practices. So for us to learn on better practices, it's better because we can translate it into the financial system. For example, I want to tell you something that it's we just started working. For example, we just started working this year together with the World Bank. We are providing technical assistance. So BICE is it's the first bank to having the a risk and technical a risk assessment on environmental and social practices. And we have seen that the whole financial system in Argentina is being lagging behind. So, for example, we started this program with the World Bank to provide technical assistance to Argentinian financial system as a whole to build a more robust social and environmental risk assessment system. We are working now with 7 public banks in Argentina, but public commercial banks, and 1 mutual guarantee society, which for us is exciting because we are not only working with banks, but also with guarantee societies. We can provide a lot of a lot of opportunity for small and medium enterprises to access to credit. This is a very first stage. We just started working like a month ago. This is a very first stage project, but we are hoping to grow, as Mustafa was saying, with the program, with the onboarding program Mustafa was mentioning. We are also wanted to grow this program for 30 financial institutions in Argentina by next year. So for us, it's key to learn and to grow and to learn from other banks as well, other national development banks and other multilateral, because we can also translate it to our whole financial system. As well, for example, another example, we just last week we did with the EADB, the Inter-American Development Bank, as we did an assessment, an impact we help with our impact assessment methodology. You know, we did a workshop in the region for the whole region, and we brought together several. It was a more practical workshop. So we brought together first some ideas on how to do impact assessment. We brought our methodology, but other government agencies as well brought their methodologies, as well the AFD from Paraguay. And in the end, the workshop ended up with several banks coming and saying, how would you evaluate this, for example, this credit line? And then several advisors will help them on how to build a more robust way. So the important of this is to enhance the design of credit instrument for companies and improve evidence-based decision making, which is key. So we as a development bank, we're not big in Argentina in terms of how much we are lending. We are first tier and a second tier bank. We're not we're not big, but we are key in how to help other institutions from the financial system to build up their knowledge. I don't know if.
Thank you very much, Paula. Thank you very much, Paula. I think, yes, that was very clear and very interesting to hear how you see yourselves as instrumental to transform the global financial system, even because of your role as a PDB and not just because of your size. So that's, I think, very interesting and very nice to see as well that you consider that you have a leading role to play in that sense. Thank you, Paula, for those first remarks. I'm going to now turn over to Ghislaine Nouril, your Director of CDG Group for ESG Policy. Similar question to you, Ghislaine. I understand that you're also a candidate to the pilot phase that we're just talking about from the IDFC facility pilot program. What specific challenges do you face in mainstreaming climate across your institution? And how do you think, which needs do you think need to be addressed in priority, and how do you think the program will help you with that? Thank you. So, it's okay.
So I would just like to make things in their context. We at CDG, we are a group of multi-activity. So we have different subsidiaries in the banking branch, in the insurance branch, industrial zones. So as I presented yesterday, we are developer, operator, and financial institutions. And each subsidiary is really moving in this field, in this sector, with different speeds. So we have some subsidiaries already accredited Green Climate Fund. We have an investment fund already having its ESG charter, including ESG and climate consideration in their process. But we have other subsidiaries but they are doing nothing. So the ambition today is to build a common framework for everyone within the group to build in this same trajectory in terms of climate transition and as well in terms of ESG. So when we are talking about challenges, the African continent is contributing only about 3 to 4% of global greenhouse gas emissions, according to OECD. So we have a small contribution, but we need to mobilize flows and capitals to help the government and the private sector on their transition plans. So it makes our mandates and purpose more complex and difficult. So we are joining the Climate Facility Program to enhance our capabilities and capacity to address climate issues within the different activities. So just giving you an example, we are trying to have a split in terms of financing, investments, we have loans, we have bonds. So just tracking what kind of projects and what kind of emissions we have, it's make the exercise more difficult. So in terms of challenges, we have to estimate our carbon footprint within different portfolios in different activities. We have to report as well, and we have the mandate to accompany the government in the transition plan. So it makes us, it's a challenge for us, but it's an exciting journey. So we would like to be involved in different working groups, in different programs and facilities to raise awareness internally, because people, you have the early adopters, but you have as well some people who are considering climate as something which is parallel, not integrated within the activities and within the business model. So I think that we have to work internally on raising awareness, and we have to work as well externally with policymakers, with the local institutions, private sector, to create a kind of certain dynamic within the market and to lead this topic in Morocco.
Thank you very much, Ghislaine. I think you added yet another dimension to the discussion here by sharing some insights on what it means for a group. And I think, I'm sure Laura from ETG will agree with me here. We've heard a lot of conversation in this COP, particularly on how challenging it can be depending on the type of institution you are, the mandate you have, the instrument you use, and how sometimes the journey is not the same at all in the objective, despite having the same objective and shared objective. So very interesting to hear how some of these challenges can be can take place within the same group. So thank you very much for that insight. I'm now going to turn over to you, Evelyn, if that's okay, from the Central American Bank for your Economic Integration. Evelyn Honoria Rodriguez, you're climate expert for the Office of Social and Environmental Monitoring, and I understand you are currently preparing your climate strategy. And Laura mentioned it earlier. You're also, I think, about to finish the alignment assessment with E3G. I'd like to know how the assessment you had with them and the work you've been carrying out with them fed the climate strategy.
Thank you, everyone. It's so nice to be here among all of you and learning from all your good experiences. I think that coordination and cooperation among institutions is what makes the COPs so rich, like Edgardo was mentioning at the beginning. So for us in Cave, it's been just a great timing. We started working on our climate strategy before we started with the assessment for Paris Agreement alignment. Then we have been moving within some changes in our governance structure. We just started with a new presidency. So we had to put that climate strategy on hold because it will then go through all the different spaces that within the bank you need to go for the approval of a strategy, right? So we put that on hold, but it was just the best that could had happened because then on this ending of the year or the beginning of next one, we will have finalized this assessment that give us great recommendations and insights of how we can improve our current draft of climate change strategy so we can be Paris aligned. And I take a few thoughts with me during this process that are great. First, I think it's so good to have an external look on us that give us an x-ray of how we are doing and how we can improve, but from the external eyes on us, not the internal ones, because from my experience being a part of the environmental and social office in Cave, it's like everything that sounds environmental or social, they go and ask us, but it's not just about one office, it's about the whole institution. So when we were requested for information about how we are disclosing information, financial states, business strategies, how the business areas are working with the countries, what sectoral strategies we have, like I have no idea. I look at the environmental and social safeguards of the bank. So I had to go and ask other areas in the bank. And like I'm explaining, so we are being assessed against the Paris Agreement alignment, how we are doing, and then they start thinking, oh, okay, so that kind of fashion about climate is not just for your office. It has to take a look at what we are doing. And like, for example, from our accountability department, like when I was asking, so how we are engaging with TCFD disclosure, or how we are reporting under some standards about sustainability, he's like, at this moment we are not doing it, but we're being talked about it, and like it's something that we have to start doing soon. But it requires so much technical assistance. It requires also to have the human capacities that Luis was mentioning, that we lack the human resources or the technical knowledge to get to those parts of the Paris Agreement alignment that we need. But it's good to have this x-ray because it gives us a full diagnosis or what areas we have to improve, and that it goes beyond just ESG. It goes to your whole structure. So I think that was the best thing to begin with, because then when we got the first draft, we were also saying, okay, so it's not like we can say a lot about it because it's just this external diagnosis. We can clarify some things that maybe weren't understood as they are really happening inside the bank, but we share with the whole bank, with all the areas. So I don't know if all the areas read it, but some of them did, and what their feedback was about is like, oh, wow, this is really important. This is something that should have a momentum in the bank, and let's hope the new presidency takes this and we move forward to a new strategy for us that take us to the leading side of climate finance in the region, because we are a highly vulnerable region in the world. Central America countries have been on the global climate risk assessment on the top 5 positions, like in the last 6 or 7 years. Honduras was the first in that risk assessment, like for 10 years in a row. So we do have a need for climate finance to be growing and for climate action to be really embedded in the business models of everyone. So, but for that, in order to do that, we need to start reinventing financial mechanisms and to reinvent the multilateral development banks and the national banks, because from our region, I think also that the standards we put are the ones that are being cut and copied or scaled up by the commercial banks or the subnational banks. So it's a good way for public development banks and multilateral development banks to raise the bar so we can get everyone there. And the third message I take from this experience as well is that, as Laura mentioned, context matters. Not all of the 15 metrics are really important for us or are doable at this moment because of the context of our region. Like, we are small developing countries where energy access is a priority, but know what type of energy you're bringing, if it's renewable or not, just to get the energy to the people. Same about biodiversity targets. We are a mega diverse region, but committing to targets like zero deforestation, it's so hard because we don't have even like a full map that takes a close look at what our forest areas are, who are in there. Like land titling is an issue for us. So to have a target of zero deforestation when you have no titling, land titling done, it's really hard. So we have a lot of challenges, and that comes from the context of the level of development we have. And I think it's a good takeaway that you and E3G have from us, that context really matter, and that not all of the 15 metrics are applicable to all banks. But like you were mentioning, ambition is the driving force and the most important one. Even though we are all in different stages, at least that is what is driving us towards this goal, the Paris Agreement goals, the 3 goals, because it's not only to have temperature hold below 2 degrees or 1.5, it's also to invest in climate adaptation in the same in proportion that climate mitigation, and for a highly vulnerable region, climate change adaptation, it becomes more relevant than climate change mitigation. And the third one, about transforming the economic models. So that means that you have to reinvent and transform finance as has been done historically.
Thank you very much. Again, very inspiring. I noted that context is very important. I also noted that, again, I think that mirrors what the people speaking before you just said, how you have a leadership role as a public development bank as well for the broader for the financial system, but also for the broader economy, and how you can engage with the government with that. And also, I think you also insisted, and I think it's very important, on the importance of engagement and ownership and ambition inside the institution, and how you, as the climate finance team, have that role to play also to get everybody on board internally. So that's great. Thank you for that. I'm now going to turn over to the third panelist that's in the room with me, Olympus Madanta, your Director of Climate Finance with the Development Bank of Southern Africa. Now, I think you have a slightly different experience here, because I understand you took part in the assessment study, which we've been talking about, that IDFC has been carrying out throughout the year. But I understand you also benefited from a just energy transition strategy support with that from IDFC. And on top of that, you're also currently beginning work with E3G on assessing your portfolio. So you have a very good view of the support that IDFC can provide its members. So considering this very rich experience, could you perhaps please share with us what you think the main challenges are and the needs regarding Paris alignment and mainstreaming climate more broadly across your organization? What internal capacities do you have available, and how are they going to be developed?
Yeah, thank you very much, and thanks for the invitation. The DBSA, I'm sure most would be aware, we are mostly in the infrastructure space, and I think that informs the things that I thought I would talk about. And I thought I would maybe talk about what we are looking at in terms of focus going forward, and then reverse that and talk to the challenges in trying to achieve exactly that. So the thinking we have been having recently as a bank is to really start thinking about in your infrastructure development and implementation, how do you go beyond just looking at hard infrastructure to looking at ways of ensuring that you include biodiversity, nature-based interventions in how you do things. And so that's a bit of a change for us, if you compare to, how we would have done things before. And so we have found that partnerships are quite key in trying to change that focus in strategy. For example, what we learned in some of the projects that we have been implementing, especially with Jeff's support on work around catchments, is that in many ways, when we are looking at hard infrastructure on the water side, you would not be looking at upstream or downstream interventions of biodiversity nature that increases the efficiency of the hard infrastructure that you are looking at developing. And you find that when you look at those interventions separately, the ability to finance your nature-based interventions on their own becomes challenging. But if you start thinking about development of your hard infrastructure that integrates those components that are key for its efficiency, then your financing is looked at slightly different and makes it easier to integrate and then finance. And in that regard, you need to be partnering with the right institutions that know what they are doing in that area so that you are effective in what you are doing. And we are looking at putting a lot of thrust on that, and we think we are onto something quite important in that regard. And I think it will change in many ways how we approach financing. The other thing that we have been looking at is, and again, that's what we have learned in implementing some of the projects, especially with the Jeff in this case, is that traditionally we have always had well-developed safeguards, but our focus would have been to say, you want to identify environmental impacts, and then you'd look at how you would mitigate any risks that you identify. But what our thinking recently is to say, we need to go beyond just addressing those impacts, but really significantly looking at how our infrastructure interventions could be nature positive. So what it then means is that, again, when you go to the drawing board from how you finance infrastructure, you would look at the normal way that you'd look at infrastructure financing, but also pair that in terms of how you implement the project with interventions that would help your project be nature positive, but not really in the sense that you want to blend the financing. But if you like integrating the project, but still separating the financing because of the challenges in trying to bring that together. And we think it's a very important intervention. We are looking at doing a lot of that. Actually, we have started on a few initiatives. And of course, the more you talk about these issues, you start talking about your internal capacity to be able to do exactly that. And that's where sometimes it gets to be challenging. And that is why for us, our involvement, especially within the IDFC and interactions with members and the the interventions that we have are quite key because they help us a lot in getting to the point that we need to get to. I was actually just listening to the colleague from Kabe talking about I don't know whether it was the presentation that was made, but the well-developed criteria around transition financing. It just triggered a thought in my mind because, at the DBSA, we made a public statement that we would cease investment in fossil fuel, projects unless there is a well-defined, robust transition plan. So it was good to make the statement up till we start going back to our investment committees, and the question becomes, what is a robust and unambiguous transition plan? And we didn't have a very good answer to that, and of course it comes back to us to say, yeah, this is what you have been encouraging us to do. So what do you do with that? So I was thinking while sitting there that I need to talk to you and see what you have done, and we can pick up from that and enhance what we have in place. Because what we have in place at the moment is really just a guideline that really needs to be developed to a robust framework. So for me, that is the beauty of the IDFC and the ability to learn, among, members. But the other thing I wanted to talk to quickly is that, obviously developing, appropriate financing instruments always is an important intervention. We've been talking recently to one of our commercial banks in South Africa around developing, I think what colleagues are familiar with, more an outcome-based type of funding initiative. Very interesting because we started to look at how we can start, using especially our accreditation with the likes of your GEF, GCF, to put that in place specifically for biodiversity projects, not only in South Africa, but in the region. And it's very exciting what we think we are getting to because of the interest and the potential of leveraging significant financial resources, not only from commercial banks, but mostly from your institutional investors. So, that has been the direction that we are taking. But again, when you look at all this, it goes back to what is the level of your capacity in place as an institution to be able to deliver that. We see more opportunities than we can be able to handle from a capacity point of view. We see more opportunities than the expertise being at the level that you are required to be able to deliver effectively. So that is, quite key. So I think that is why for us, we think these interventions are very important. Thank you.
Thank you very much, Olympus, and thank you for putting climate and biodiversity on the same level. I mean, you were not the first one to speak about biodiversity, but I think it's important to remember that as well. And thank you also for insisting on how capacity building is important to be able to seize all the opportunities that you as public development banks have, to mainstream climate finance more broadly into the economy, and how it's important, particularly at operational level, to have this capacity building throughout the organization. And now to our last panelist, I hope you can hear me, from Ashbor, Croatian Bank for Reconstruction and Development. Drazenka, can you hear us? You're
Yes,
advisor to the management board? Yes?
Yes, I can hear you.
Great.
Hello, everyone.
Hello.
Well, my name is.
Yes, I was just gonna. Yeah.
Okay.
I'm going to let you introduce yourself. If you don't, I'll just introduce the question, and then I'll let you maybe introduce yourself again. Similar question to you, because I think you also took part in the needs assessment that IDFC facility has been carrying out this year. And if you could share your experience, challenges, and needs regarding Paris alignment and mainstreaming more broadly into your organization, and maybe reflect a little bit on your internal capacities, what is available and what is to be developed. Sorry, I'm just reminding the question for those who are online and maybe just joining in.
Okay, thank you. Thank you very much. My name is Draženka Draženović Kostelac, and I'm from the Croatian Bank for Reconstruction and Development, HBOR, as we call it briefly. I currently work as an advisor to the management board. HBOR is a Croatian state-owned bank. It was established 30 years ago with the main purpose then to reconstruct the Croatian economy after the war we were having in beginning of the 90s. But now it is a development bank that promotes sustainable development, export financing, and especially low carbon transition of the Croatian economy, among other activities. The beginning of our green finance development started around 18 years ago with no legislation in place and with no clarity and certainty regarding sustainability of projects that were related to climate, mostly renewable energy and energy efficiency projects. Our role then was to cooperate closely in working groups with the representatives of the different ministries that were in charge for renewable energy projects, fund for the environmental protection, and all other entities relevant for the development of the necessary legislation. In that way, we were at the very source of the information, and we were able to influence on the development of the regulations, with the main purpose to make potential projects more clear and more stable, more certain for the financing stage. We were also then beneficiaries of the Global Environment Facility Grant through the World Bank. That was an intermediary, and we, at that stage, we financed the preparation of the renewable energy projects, meaning we financed all the necessary documents that were needed to prepare a bankable project. That was very important to kickstart that development of these kind of projects in Croatia. After that phase, we received funds from the German Development Bank, KfW, for the project called Promotion of the Renewable Energy and Energy Efficiency Projects in Croatia. Then we were offering technical assistance along with the loans for the implementation of the project. These loans were approved based on the concessional terms, on concessional conditions, below market interest rate. At that time, it was very difficult to find ready, mature, and bankable projects in the green finance domain. So we organized trips all around Croatia, and we were trying to find even project ideas that seemed reasonable at that time. And then we worked closely with the investors and helped them with these technical assistance to make those projects bankable and ready for our loans. This year, we finished the project, a very important project for our bank. It is called Reorientation Towards Sustainable Finance. The project was funded by the European Commission, DG Reform, and we developed an action plan. The action plan is currently in the implementation phase. Current challenges and ways to moving towards successful climate and biodiversity finance are now focused on few concrete issues. First, there is very complex sustainable finance regulation, and they require that financial institutions like our bank, like HBOR, fundamentally alter business operation. To mitigate and manage risks, it is imperative that Harbor should strengthen its business practices and to adjust to new regulations that are coming. It is CSRD requirements. We also have expectations from the European Banking Authority. And our mandate and goal is to support Croatia's green transition to maintain profitability and growth. The way to overcome these issues and challenges is to prepare for the financing of the Croatian low carbon economy. And we are planning to do some issues in way to simplify guidance documents to be provided to smaller market participants, because majority of our companies is in the micro or small segment. And we would like to help them to achieve their sustainable goals through our financial instruments. We would also like to engage larger clients in the climate sensitive sectors in Croatia. And we must soon, it is very urgent for us to initiate EU taxonomy KPIs collection. We are also planning to develop a sustainable finance product framework and prioritize KPIs and integrate these KPIs in our current reporting framework. This is everything that is in front of us in it will happen very soon. We also need to understand large client decarbonization pathways and strategies. And we should develop even more favorable pricing terms and conditions on green projects, and to meet needs of clients and overcome market barriers. These more favorable conditions include discounted pricing in the form of lower interest rates, possibly sustainability-linked products with longer grace periods. We are also trying to extend the maturity of project finance loans for clean energy investments up to 18 years. Now we have 15 years. Also, it will be dependable on the project risk and context of the project, of course. We are trying to reduce the equity contribution requirements from the clean energy infrastructure projects. We are also aiming at developing promotional and awareness building programs to attract bankable, sustainable projects that are ready to finance here in Croatia. We are also expanding partnerships to access concessional financing and grants to scale up investments made under the project finance methodologies. We are also trying to improve our guarantee schemes and project preparation facilities to develop even more project pipelines. We are also developing financing solution for strategically important clients for Croatian economy. And we are de-risking low carbon and transition investment with guarantee mechanisms that we are now evolving in the bank. Also, Harbor can scale up the use of the blended finance for sustainable investments, because it will allow Harbor to mitigate multiple risks like technology, economic, payback risk, credit risk, and test new business models and ensure appropriate risk sharing with private sector commercial banks and cover additional transaction costs on new business models. And finally, our financing and investment goal is to strengthen and to accelerate the green transition and to support the overall sustainable society in Croatia, because we are a national development bank. That is briefly from my side on our goals and everything that we went through in these 18 years and our plans for the future.
Thank you very much, Strazenka. There's an alarm just gone on in the room. I hope it's not too serious. I think that means we're getting close to time. Thank you very much for that presentation. I think it was interesting to have a European bank's perspective too, and also bringing in some interesting perspectives on how capacity building also helps you with complying with regulations and better understanding them. But also, I think I also noted that we spoke earlier about seizing opportunities through capacity building, and I think you were also showing us very well how capacity building also allows you to create opportunities and to identify new opportunities. So I think that was also extremely interesting. I think we have a few minutes for questions, if there are any questions from the audience, or I see Mustafa.
Just one information, just to mention that for the E3G assessment, we have, after CABE, we have also 3 other banks involved in this program, the BSA, BOAD and CAF. I wanted just also to thank the European Carbon Foundation, because they co-finance the program for the Climate Finance Onboarding program. This is why we have the opportunity to include one non-IDFC member. Is the first program for which we can do that, thanks to the contribution of the European Carbon Foundation. Thank you.
Thank you for the context, and congratulations on the new members and participants in these different programs. I don't know if there are any questions from the audience before I pass the floor over to the concluding speakers, because we have 2. Otherwise, maybe I would have one, but I don't want to take the microphone from anyone else. No? Well, maybe if one of you, in that case, could just reflect in a few words, maybe on the importance of capacity building, also, I believe, to create a culture inside the organization and to really mainstream, but at the highest level and throughout the organization, what capacity building can do to help with that. I mean, you all touched upon it a little bit, but I think having a very strong culture of climate change and mainstreaming climate change within the organization is very important, and capacity building is one of the ways to get there. So I was wondering if there are any other ways to get there, and also, how capacity building can help you with that. If anyone wants to take the question, there's no obligation. I see maybe Paula is nodding, so I don't know if, and you would also, Ghislaine, like to take it. Thank you.
I think it depends on who are the beneficiaries from the capacity building and technical assistance. Because we are struggling in emerging markets, we are struggling on project preparation. So we need technical assistance inside the bank to help us on how to evaluate projects. For sure, we are building our ESG systems, ESG and climate management systems, according several standards, like performance standards from IFC and others. But we need as well internally to enhance, to build capacity for people, from analysts, from investment people, and other functions. So this is the first step. The second step is building capacity for our clients as well. Talking from previous experience, so IFD, BRD, EIB, and KfW were launched the kind of program, Moroccan Energy Sustainable Financing Program, including financial solution plus technical assistance for the banks and for clients, for the private sector, plus incentives. It was a real success, and I think this kind of composition or of facilities can help a lot to create a dynamic within the markets. This is the first thing. The second thing, it's a question for IDFC Secretariat, if they are preparing kind of programs to help emerging countries on how to access loss and damage funds. So it's very, very difficult for us. I know that it's a topic which is complex, but now we can have this kind of something which is new with this COP28, and we would like to know how we can access this kind of funds, and if there is an ambition within the IFC Secretariat to do it.
Thank you. Now I want to answer the question on behalf of IDFC. Olympus, you also wanted to add something to that, and then I'll pass it over to Paola. That's okay.
Now, just a very short thought. My experience is that, we have an effort of embedding climate, biodiversity, and the rest of these good things within organizations. Your credibility really rests on your ability to translate the ideas and the intentions into action. Without capacity, you do not achieve that. So it's important to pick up your capacity. Thanks.
Excellent. Thank you for adding that. And Paola, did you want to respond? It seemed like it.
Yes. Yes, I think that I was really represented when they were on CABE, they were telling their experience and saying that when they talk about environmental, they always think and look at the area and say, okay, this is a crazy environmental friendly people and they have to take an opinion on this. Okay, so we started a program in the bank to build up 10%, with capacity building, with up 10% of, we call it sustainable ambassadors, but really it's actually people that are promoting in different areas of the bank. So it's all over the bank, the sustainable issues, not only environmental, but also social. So this is changing the culture of the bank. This is one thing. And the other thing, yes, I also wanted to mention, it is really important to build capacity on our clients. With our energy efficiency credit line, we found out that most companies, they did not have the capacity, but they did not know basically what energy efficiency was. So we built up projects that we went into different provinces. This year, we train like person to person, we train more than 400 companies, but as well we have our online community, which is helping to build up knowledge on different issues, including energy efficiency, renewable energies, how to mainstream gender into their operations, as well as sustainable issues and how to manage them. So basically, it is really, really important, not only for inside internal, but also external.
Thank you very much, Paula. And I think you will have had the concluding words from the speakers. I think you all deserve a very big round of applause. There's a lot of work still to be done, but there's already a lot being done. So that's very good. And I'm now going to turn to our two concluding speakers today. We're lucky enough to have two. I think you have a little, so we've still got enough time for both of you to take your time, and it's not easy to share the floor, so don't feel pressurized with time. That's what I mean. So Ariane, I see you standing, and you're probably going to start. Ariane Cornujouaf, Program Manager, where you like, yeah. You're Program Manager, Climate Finance at European Climate Foundation. And also then we'll be hearing from you, Carolina Aguirre, Associate Director, Field Innovation at Growald. I don't know which one of you wants to start, but yeah, Ariane, then the floor is yours. Thank you.
Thank you very much, and good afternoon, everyone. So I guess I'm going to take a bit of a step back and say that it was super refreshing to hear from what is actually happening on the ground during this side event. I think at COP this week and this year, we've heard a lot about IFI reform of the MDBs, and we're talking a lot about quantity. And it's important to remind ourselves that in order to have more quantity, we really need to focus about quality. When we look at IDFC, it represents 600 billion annually. FIX is 2.5 trillion. So if we actually work towards Paris alignment, we can. It's the only way we can reach our goals. So I think it's really important to have the programs that Mustafa presented that really focus on the PDBs that work on the ground in Croatia, in Morocco, in Argentina, and so on. And that we're super proud at the European Climate Foundation to be supporting the Climate Finance Fast Track onboarding program that really can really support PDBs to become real actors of the transition, of Paris alignment. And also, I was really happy to hear you talking about biodiversity today. And so, yeah, I think it's great. I'm going to stop here because I think it was already a very rich side event, and pass it on to Carolina.
Thank you, Ariane. Very much echo everything you said, and I just want to hone in on one specific aspect of the role of PDBs, which is the crucial role they play in supporting the energy transition. They know the local, well, especially domestic and regional ones, they know the local context better than anyone. They have established relationships with domestic actors, as our colleague from BICE was articulating, and really, well, lending in local currency. I could go on and on, but I just wanted to go deeper into. You may be facing some internal challenges. You may be pricing, you may be complaining real and perceived risks for renewable energy, and as you were, for instance, articulating, this may be a case of the risk management committee not really having a good enough understanding of how to price risk for technologies that are not well known. It may be analysts that are really in need of more capacity. So we're really thrilled to partner with IDFC. We're very excited to empower you and support you in driving this. So yeah, just very excited for what's to come, and thank you for the invitation.
Thank you all. I think we're not far off time. Yes, a few minutes early, so give us some time to have a drink before the next event. Thank you very much, Mustafa, and all of you for organizing today's event. It was a pleasure. Thank you.
Created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC, let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the coming Montreal Global Biodiversity Framework. Our goals: knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the coming Montreal Global Biodiversity Framework. Our goals: knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities, In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and
Good afternoon, everybody. Welcome to our session, Decarbonizing Southeast Asia, the Role of Business Sector and Developing Financing Institution in Materializing Net Zero Ambitions. I am Noriko Yamada from Japan International Cooperation Agency. Welcome, everybody. So we have a very packed agenda today with 2 sessions with a lot of panelists. Without further ado, I would like to first invite Dr. Muto Megumi. She's our she's our Vice President and Chief Sustainability Officer from the Japan International Cooperation Agency.
Good afternoon, everyone. Thank you so much for coming here this afternoon to this discussion on decarbonizing Southeast Asia. We will be discussing the role of business sector and financial institutions. The focus is Indonesia as well as Vietnam. They have embarked on a difficult path for transition to net zero. They are also JETP countries aiming at decommissioning coal. This session is organized by JICA, Japan International Cooperation Agency, where I come from, and we are a development agency of the Japanese government in activities such as technical assistance as well as development finance. At JICA, we have just announced our sustainability policy to align to Paris Agreement. Thanks to a lot of learning opportunities with the IDFC peers. Here we are in this IDFC pavilion. We also established the Office for Sustainability, and I'm the first Chief Sustainability Officer. So we have just started on our journey. Let me mention that with our technical assistance, we are principally on the side of the partner country. We really think through together how to overcome the technical difficulties, institutional obstacles, and ultimately think about the social challenges in the journey to just transition. That's our technical assistance part. We also have the development finance activities. There, we wish to mobilize private finance as much as possible. But typically, maybe I'm over-exaggerating a little bit, but the private financiers are more on the ambitious side of the transition towards carbon neutrality. So in the field, we have found there's a real gap, and engagement alone cannot fill the gap. Maybe we have to come closer as a community. As the Chief Sustainability Officer of JICA, I will have difficulty in my own integrity if I cannot fill this gap. We cannot effectively cooperate, country, businesses, private financiers, including the development finance institutions, if we do not sit together and have an honest discussion. I think this is the start of the very good conversation. We have our speakers from Indonesia, who will tell the journey to net zero, and we will think together how to support. Thank you very much.
Thank you very much, Dr. Mutu, for your very clear direction on how we're going to set the environment for this session. We were supposed to have also the Indonesia representative or co-host, Dr. Edwin, who is on his way, but, oh, yes, he just arrived. Yes, just on time. So we're waiting for Dr. Edwin Siaruhat, President Director for PT Sarana Multi-Infrastructure. Thank you. Please come to the podium. You arrived just on time.
Let me double check whether the topic is correct. Okay. Good afternoon, ladies and gentlemen, dear excellencies, ladies and gentlemen, and esteemed colleagues. It's a great honor for me to stand before you today to represent PT Sarana Multi-Infrastructure, joining today as a co-host of this event together with JICA. I think to achieve in the aim to achieve the net zero ambitions, in particular commitment to shape a cleaner and a more resilient energy landscape in the future. I think we have set an ambitious targets to make this energy transition become reality, and therefore effective cooperation and innovation in energy sector is needed. PTSMI, as a special mission vehicle of Ministry of Finance, will continue support from the government together with the respectful partners. Of course, we are committed to be at the forefront of this effort. I think we hope that throughout the discussion today, we could see more clear and concrete collaboration between the government, private sector, public sectors, and also banking or financial institution to facilitate the transition toward net zero in a practical way. We, PTSMI, JICA, and all parties present at this event is one of the responsible parties to be at the cutting edge of this transformative journey. Let's work hand in hand along the government, industry leaders, and community to lead the way towards a more sustainable and resilient future. Thank you.
Thank you very much for the encouraging word and for setting the scene for our discussions. I would like to then ask to Mr. Koji Fukuda, the Chief Advisor of the JICA NDC Implementation Support Technical Assistant Project, to come to the podium and provide us some explanation for starting the session 1 of this discussion. Thank you.
Okay, a very good afternoon and assalamu alaikum to everyone, and also bonjour. Thank you, MC, for your kind introduction. My name is Koji, and I'm currently spearheading JICA's technical cooperation in Vietnam to support the implementation of NDC and in the context of net zero. Okay. Could you turn the slide, next page, please. Okay. So I just provide, before we go into the first session, I'd like to just provide you and walk you through the some slides to set you the scene so that we can have a smooth discussion at session 1. Next slide, please. Okay, so basically, I'm going to just walk you through very quickly how the Southeast Asia looks like in terms of policy landscape at the moment. And then we look at into a more changing business environment. And then we slightly touch on the financial sector's alignment with Paris Agreement. And then some takeaways from HPCPW just took place two weeks ago in Johor Bahru, that we had a conversation with stakeholders, and then some framing questions for us to go ahead. Next page, please. Okay, in terms of the policy landscape in Southeast Asia, I think it is very clear after the Paris Agreement, also a battery of carbon neutral political pledges that happened at the Glasgow, the things has been accelerated a lot. And we are more into the implementation mode. And we have been observing the shift, very strong shift to implementation, and the stakeholders are committed to now delivery of impacts to date. So we see the action to translating these pledges to actions are happening for every country within the Southeast Asia. And at the same time, this carbon neutral net zero, as you know, the pledges contributed to sort of recent updates of all the national NDCs for its respective countries to align with the ambition level that is also pledged under new carbon neutral. So there is a sort of striking these linkages and between the NDC and net zero. So this nexus has been more clear at the moment. And if you look at the regulatory frameworks following the pledges, we have seen countries' effort to flesh out these domestic policies, regulations to mandate all the stakeholders to get into the actions within their own national framework, and including some measures to mandate the management of greenhouse gas emissions for private sector. Next slide, please. Okay, in terms of private sector, if you look at the private sector, of course, it's it comprises of many different subsectors per se. However, we see that private sector has very unique and two attributes or characteristics. On one side, private sector is also serving as a big greenhouse gas emitter. But at the same time, they are also serving as a solution provider in terms of serving as the custodian of the decarbonizing technologies, development and deployment, at the same time providers of resources as well. So that's a very important aspect for us to elaborate now. And also at the moment, I think the private sector is standing at a very critical juncture. It's a very interesting time because they are facing two different responsibilities at the moment. On one side, they are facing these new waves of domestic compliance with domestic legal requirement that sort of follows the NDC and net zero target. But at the same time, with or without these domestic legal provisions, the private sector, more or less implicated in the global supply chain, they have to follow this climate-related disclosure and sustainability requirements anyway to manage their scope 1, 2, and to some extent 3 emissions as well. So they have to do it at the moment. And in terms of the, because this trend is happening quite quickly, So we've seen also some changes within the business sector as well. In terms of the corporate behaviors, we've seen that there is a growing recognition among private sector that now the climate impact is considered as a business risk, and the sustainability consideration and the Paris Agreement alignment are more or less becoming the business imperative. So they will have to do that. And also there is also increasing evidences of the change of mindset in business leaders, so that there are more cases of decarbonization management happening, starting from the more multinationals, but also trickling down to more national companies as well. And this effort to mainstream climate considerations into midterm business plan is up and running. And also in terms of the perception change, perhaps I would like to highlight that carbon neutral and net zero is also served not only as the as a climate agenda, but also the source of the economic growth. And also many stakeholders view or take this carbon neutral as opportunity to enhance their competitiveness. So how to stay on the competitive edge? Well, they'll have to stick to the climate change. Next slide, please. So this slide will be more elaborated in the second part of the session. I just briefly touched the surface of it. So as you know, there's also growing actions or recognition by financial sector to recognize, analyze, evaluate, mitigate the climate-related also sustainability risks. And there is also a surge of this global alliance among the banking sector and different financing institutions to adopt this race to zero policies to steer towards sustainable transition, and naming fewer NZBA and G funds. And also there is a growing importance of this transition finance. And I think in this space, the financial institution has a lot of role to play. And the challenge here is that how to best navigate this transition in a way to strike Paris compliant decarbonization trajectory and also meeting the timeline while not undermining the stability of energy supplies. This is especially challenging in the context of Southeast Asia because Asia is growing quite rapidly and there is still high demand for energies. How to reconcile that? So it's easily said than done. So that's something that needs to be at least taken into account. And then, but the positive side of the current situation is that there is progressive development we witness in terms of adopting taxonomies by several countries, including Singapore, China, Malaysia, Indonesia as well, and also the development of guidelines and guidebooks to fill in this gap, including this Asia Transition Finance Guidelines, just led by MUFJ, our colleague, and the ECMA handbook as well for the bond side. And then if you look at the individual financing institutions, yes, they are also making a lot of effort, and we should not underlook. They are also doing a lot of work on reducing or managing on balance sheet financed emissions, and also setting the quantitative targets, quantitative financing targets towards decarbonization, and also producing sustainability products and services. So there are a lot of things happening, and this is a very interesting time. So that would actually fit into the discussion for the second session. So with that, I'd like to just stop setting the scene. Thank you.
Thank you very much, Mr. Fukuda. But I would like for you to join again us here to start the session 1 as a moderator. We are starting the session 1 on country experiences of private sector engagement in net zero, and I would like to ask also the panelists for the session 1 to come to the podium. We will have Ms. Nguyen Nhat Hachi, ESG Manager, Dragon Capital Online. We have Dr. Long Quang Huy, Head of Mitigation Division from the Department of Climate Change, Ministry of Natural Resources and Environment from Vietnam. And we have Ms. Miki Yamanaka, Senior Manager, CSR and Global Environment Center from Daikin Company Limited. The floor is yours.
Okay, good afternoon again, and welcome. Welcome to this first session. So we have each panel, two offline and one online, joining us from Saigon. So let's connect later. So to start with, let me start with perhaps Ms. Yamanaka, and as the front runner of this cooling sector effort. So Ms. Yamanaka, so my questions are actually twofold. And as we just heard from my presentation per se, there's a growing expectation for private sector and enterprises to play the role of this solution provider, and through this technology and the goods and services and provisions. And the Daikin has been quite active, not only regionally but also globally in terms of decarbonization in the cooling sector through your products and services, and sometimes you're a standard for some countries as well. So my first question would be, could you tell us your corporate strategy as a Daikin company as a whole, and how, and perhaps show us some examples of how Daikin contributes to decarbonization in net zero and DC, the first question. Second question being, to provide solutions to this net zero agenda, what kind of actual constraints that you're feeling and having, and what recommendations you perhaps thresh out to the our audiences? So you have a floor.
Just have your mic closer so that we can hear you. You can. To make a presentation. Sorry.
Hi, good evening, everyone. Thank you very much for joining. And then I'm really, really honored to be here as a panelist. So I'm not supposed to be speaking as a presentation, but in order to make you understand, have you understand what we are and what we are trying to do, and then what kind of challenges we are facing in the Southeast Asia countries. So in the beginning, would you?
Tech team, could you please scroll down the screens? Just go all the way down. Yeah. Okay,
here.
that's it.
Right, so including our company's introduction, I would like to introduce you some of the activities of ours. So in the beginning, first of all, I would like to introduce myself. My name is Miki Yamanaka of Daikin Industries. I'm in charge of global environmental activities all over the world at Daikin. Without much ado, I'd like to introduce my company. First of all, I'd like to briefly tell us what we are. We are a manufacturer specialized in air conditioners and heat pumps. And we will celebrate 100th anniversary next year. So we operate globally with more than 80% of our sales and employees in overseas. So in 2018, we have committed to achieve net zero emissions by 2050, which is a very challenging goal, but we are trying and at this moment. So we emit actually in total 340 million tons of CO2 last year, including scope 1, 2, 3, everything. And then the 80% of which is emitted when our customers use our air conditioners. Because air conditioners use electricity, the CO2 emissions associated with the use of equipment are still high due to the high emission intensity. However, toward carbon neutrality, we are working to develop and promote higher energy efficient air conditioners and heat pumps and proper recovery of refrigerant. So the first one is the technology to make the air conditioners more energy efficient. That is called inverter or variable drive technology. That is essential for high efficiency air conditioners. And this technology makes immediate impact expectational outcomes, exceptional outcomes, in particularly can reduce power consumption by approximately 50%, sometimes more than 50%. It's a quite big energy saving we can make. So, however, this technology has not been widely disseminated yet in many countries, although it is already available. In particular, the implementation of appropriate energy efficiency regulations in line with ISO standard for performance evaluation is necessary to disseminate higher energy efficient air conditioners. So we have been supporting the formulation of energy efficiency policies in engaging countries in Asian countries like India, Latin America, and Middle East and Southeast Asia. In cooperation with various international organizations and governments, we will continue to develop further higher energy efficient air conditioners, train service engineers, and contribute the implementation of appropriate energy efficiency regulations. So next one is the HFC management. So HFC is a hydrofluorocarbon, which is acknowledged as GHG, as you know. So that substance is used for the refrigerant for air conditioners. Refrigerant is a key component of the air conditioners. Without refrigerant, air conditioners cannot do anything, cannot cool, heat, whatsoever. So it is a key subject, so that life cycle proper management of HFC is a key to be sustainable cooling, and then also the sustainable company of ourselves. So the refrigerant used in air conditioners, namely HFC, has been internationally agreed to be phased down, not phased out, phased down. So please remember that. So in the Kigali Amendment of the Montreal Protocol, so we believe that it is an important responsibility for manufacturers to develop using the low GWP refrigerants. We will continue to promote research and development activities of new refrigerant with further low GWP. We are now using low GWP refrigerant called R32. So GWP is 675, which is compared to the which is the one-third of the conventional refrigerant used in widely all over the world. But we'd like to develop further lower GWP refrigerant. So we are aiming at less than 150 or 10 or something in a really low GWP refrigerant. And then we, as a air conditioning manufacturer, we'd like to develop technology to utilize such low GWP refrigerant. So that is contribute a lot to mitigate global warming, we believe. So particularly in many countries, vent HFCs into atmosphere when air conditioners are disposed. That is a very big challenge we are facing at this moment. So we believe it is important to recover and properly treat the HFCs in the air conditioners. Furthermore, in terms of circular economy, reclamation of refrigerants can contribute to reducing the amount of newly produced refrigerant. That is also important, we believe. So we are working to establish a framework for the proper recovery of refrigerant in Japan, the United States, Europe, Southeast Asia, such as Vietnam, Thailand, Indonesia, and Singapore, India, etc. So we are trying to establish recovery schemes. To be more practical, the emission control regulation help facilitate properly managed HFCs. Financial support also is needed and effectively to make the regulatory tool effective. So today we can utilize a digital technology to track the management of the HFCs throughout life cycle too, which will play an important role. So let me introduce a case study. We are working in Vietnam. Sorry, the slide is kind of messy, but I will try to make it simple. Sorry. So this is a case study as JCM project supported by the Environmental Ministry of Japan. We are working with other Japanese companies to establish a refrigerant management scheme in Vietnam. This is the flow. The refrigerant will be recovered from end users and then transferred to the collection site to be inspected and charged into larger cylinder, and then transferred to destruction site or reclamation site. All processes will be tracked by a tracking system. To make it feasible, all stakeholders must work together and cooperate. The emission control regulation is necessary, of course, but we need financial support along with the regulation. Financial support for initial costs for recovery, tools, and facilities for reclamation and destruction. That's a very, very important part. Also, we need the financial support for operational cost as well. It can be partially covered by destruction credits generated by JCM, yes. But in addition to destruction credits, we should consider to create credits out of reclamation. It has not been considered under JCM yet, but I believe that it should be considered as reclamation of refrigerant is necessary from the viewpoint of circular economy, while both destruction and reclamation credits can be considered as incentive to facilitate the effective and complete enactment of the emission control regulation. So another challenge is the difficulty and the time-consuming processes involved in obtaining necessary licenses and permits to operate as business. I sincerely ask governments to consider how to solve such matter, such challenge, because this matter and the challenge needs immediate attention. We have to do something right away. So we need something to do in collaboration with private sector and government sector and everything. So, and then also here is the financial people are gathered together. So I'd like to ask, government in the financial sector's support as well. By solving all the challenges together, then I believe that we can utilize proper management of the refrigerant and then also sustainable cooling, so which lead to the decarbonization. Thank you very much.
Yeah, thank you very much, Ms. Yamanaka, for very detailed explanation, including the concrete evidences of the technologies and also the work that you have been doing in Vietnam. And we heard your challenges. I think that some parts will be carried over to the second session, I think, for consideration as well. And particularly your part is relevant because, as you know, the COP presidency at the moment is also keen to this global cooling pledge. So, yeah, I think this area continues on. Now, I'd like to invite a colleague from in distance. I'd like to invite Ms. Gwenyat Hachi from Dragon Capital, based in Ho Chi Minh City. I think she's connecting online. Ms. Chi, can you hear me?
Yes, I can hear you well. Can you hear me?
Yes, thank you very much for joining, and very good evening for you. And thank you for joining us from down Ho Chi Minh City. Very pleasure to have you here in Dubai. And Ms. Chi, also I would like to throw two set of questions to you for your response. And as you know, the Dragon Capital, I think you are also the forefront of this, investment capital. You're investing a lot of projects, and you have a vast variety of a portfolio in Vietnam. You're quite active, and we have a conversation beforehand. And could you, for the sake of the audiences, could you also share with your experiences and also ongoing effort how your capital, the firm, try to decarbonize or greening your investment portfolio per se? And so do you at the same time foresee more potential for decarbonization projects in Vietnam? How do you see the landscape? That's the first question. And second question being, from the investor's perspective, where do you see the challenges still remaining for you, for your company to go ahead with the decarbonization project? So Ms. Chi, the floor is yours.
Yeah, thank you. Yeah, good evening from Vietnam and maybe afternoon for those in Dubai. Um, Thank you. Firstly, thank you very much to let me in this important event. Let me go directly to the question. Given the background in Vietnam commitment to net zero emission in 2050, we could see a dramatically transition throughout the economic, especially power sector and building and etc. Many sector involved into the transition. So, as a long-term institutional investor in Vietnam, Dragon Capital, we are now the longest established independent fund manager based in the capital markets of Vietnam, with the AUM of $5 billion. So we consider the decarbonization or go green, both in investment and active ownership are the key tools supporting the transition to green. Firstly, talking about the investment, uh, we have an thematic investment focusing on in renewable energy, and we're using our balances apart from the $5 billion year AUM that I mentioned earlier, to and using the green loan for those investment. We have the strengthened UR process to screening for the project, and now currently we have three solar power plant in Vietnam, and uh, that is one of the part of our green investment. Secondly, we think that as we are the institutional investor in Vietnam on the frontier market, so we think that the active ownership on the advocacies is very important to help filling the gap between international and national standard. So we actively engage with policymaker, research institution, as well as our investing company. Regarding to the recently we have signed a strategic agreement with the Institute of Strategic and Policy on Natural Resources and Environment. Is the short name ISPONRE. This institute is under Ministry of Natural Resources and Environment. So the strategic agreement is on environmental protection and biodiversity. And it lasts for 3 years. Specifically, the collaboration will help for development of criteria to evaluate biodiversity in Vietnam and to form a conservation market akin to the current carbon market. In November last year, we, Ispondre and Dragon Capital, organized a workshop to announce the research result on the valuation of the ecosystem service in two important biodiversity area. First one in Cà Mau Mangrove in the south of Vietnam, and the second one is Pù Mát National Park in Nghệ An province, which is in the central area of Vietnam. So, further, we also create a Dragon Capital Chair in Biodiversity Economics at the University of Exeter in UK. So this chair is created in 2020, and we're expecting over the next 5 years, Dragon Capital and the University of Exeter will together commit about 1.6 million pounds to fund the new position, which will look to address the central question of whether there is any correlation between biodiversity and the success of the economy, and whether individuals and organizations can and should place an economic value on biodiversity. Yeah. So further, actually, the engagement with the investing company, we you may know that we have adopted TCFD, the Task Force Climate Financial Disclosure Framework, to assess the climate-related risks associated with our investment portfolio since 2020. So as of now, we have 3 years to adopt the framework, and with the support from a climate tech company, namely Intencell Limited, based in Hong Kong. The company helped us to estimate the physical risk in terms of the climate value at risk, how much dollar we could lose throughout the portfolio, and also the transition risk at the portfolio level. We also dig deeper through every investment to understand where our risks are, and actually we using the result from the assessment to engage with our investing company, for example, steelmaker company, chemical company, to share with them how much carbon emission they contribute to our portfolio. And you may know that transition it could take year. So we took this opportunity to keep go along and engagement closely with our investment company, go along with them on the transition journey, and sharing with them some reduction action if possible to them. And the collaboration between us and investing company is keep going on, and hopefully in future it could make the positive outcome. Regarding to the second question, from from an investor perspective, I believe that there are still a lot of challenges need to be addressed to enable the further investment into green for private sector. Thirdly, I think the financial institution capacity, we green financing is more technical compared to conventional financing. Banker or financial institutes like us struggle to understand the taxonomy of green finance, terminology or experience in the field. So we feel complicated in evaluating and approving the green financing application that could match the technical standard. Another challenge could be the eligible investment or pilot project in the market. Take an example of investment in carbon offset project. So we, like I introduced at the first, we have 3 solar power plant. So the solar power plant previous is eligible to well-known verification entity like Gold Standard, Vera, but now it's cannot get the certification from those standards, and we need to change to other, and we need to look to other verification entity. So I mean that the pilot project for green, for carbon offset is still a challenge to the investor to find the eligible investment to meet their criteria. Another example, like when a company want to reach the green finance, they need to upgrade their management system, especially in terms of the environmental and social ESG term recently. And they need to build the environmental social management system, the capacity in-house to meet the international and to meet the stringent criteria of the green financing. Of course, the legal framework always an uncertainty or the challenge for investor, and the clear or consistent policy support green investment is very crucial for attracting and retain investment. And I think the last challenge I would like to share could be the market demand and consumer. When we go to green investment, it's important to find the end consumer because the green product is recently it's currently more expensive than the conventional product. So that's why we need to find the consumer and find the market to have the big demand. to push for produce the products. Yeah, that's all from me, Koji.
Okay, I think I'm on Ms. Chi, and thank you for your interventions. I think it's very clear that you mentioned about your strength of your companies. You're working on several projects, including PVs. At the same time, you raised a couple of challenges. I think that's also relevant to not only to your company, but also to others, and including this the understanding of technical side of the taxonomy as well, setting your own taxonomy, and also as an evaluation standard, and also eligibility criteria verification part of the challenges, and ESG capacity in-house. And those are the sort of something also to be carried on for next discussion. Thank you very much, Ms. Chi. And now, thank you for waiting, Mr. Hui. And now we are turning onto the government side. Yeah. And because of this G2B partnership, we are now focusing on particularly B part, but I think initiation by the government side is also critical to forge this meaningful partnership. And particularly the pledges are coming from government. And now you are in the position to sort of asking all the stakeholders to collaborate in implementing this NDC and also net zero to be able to transition to this decarbonized pathway. So with that said, so Mr. Hui, so in Vietnam, you are also have an NDC, and you are now implementing it in the context of a net zero direction. And particularly, you have already devised legal foundations, including the revised law environment protection, also degree number 6 guiding the mitigation. I think that's a very good start. Maybe not perfect, but a good start to navigate the people. And now, private sector engagement and investment also a must, I think, as part of your implementation. So what concrete measures does your government really take to facilitate private sector come aboard and also invest towards decarbonization? Perhaps you can tap a little bit on this recent JETP initiative resource mobilization plan as well. And the second question being, of course, from your central government perspective, you also face challenges for sure. So what are the challenges that you can see from your side of this landscape, Mr. Hui?
Thanks, Koji, and good evening, and thank you very much for having me here. And that's a very interesting session here, and I think that in the past few days here at COP28 that we all talk about energy transition and engagement of business sector and so on. Well, that's a very good question that Koji raised there. So what the first one is be about what the concrete action that the government would take to ensure that the participation and engagement from private sector. I'm going to say that, well, we have several action, actually, not really a single one to be called concrete, really. But before going to that, let me provide you with a bit of picture there. Before 2021, before COP26, private sector actually didn't know that they had the responsibility for net zero. They know that they would have a responsibility for GHG emission reduction to some certain level, accordingly to the NDC. And we had the NDC by 2020 submitted to UNFCCC already. And 2021, we committed with net zero at COP26. So 2022, we revised our NDC, and with that revised one, we doubled the commitment. Yeah, so with that doubling commitment like that, the government can't reach the objective by using policy measure alone. Yeah, but for 2020, that with the current existing work that for 2020 objective, that with the current existing work that governed by several laws, for example, law on energy efficiency and conservation, and law on environmental protection, and with many of those GHG emission reduction measures been going on. So if we just scale that up a little bit and then get that MRV properly, then we actually can achieve that. But when we double that, almost double that in 2022, the government can't do that. Impossible to do that by using the policy measure alone. So that when we need to get the private sector on board, and immediately. And then energy transition trend arose, and that we've been doing energy transition all the time actually, right? And in Vietnam, in the past 20 years, we from 2% in our energy mix. 20 years ago, we only 2% of wind and solar power, and now we about 21% in the past 20 years. That's a massive change, and we okay, but we still okay with all industry and development. And I believe that we can double that in the next 20 years. But we actually have to double that in 7 years, right? So basically, you packed the work of 2 or 3 decades into 5, 6, 7 years. So that requires a lot of work, a lot of policies, a lot of finance, yeah, and people and personnel into the system. Luckily that with all of those things, that actually opened the gate to a much larger and fastest growing markets for the business sector. And the business sector, they can see that. They can see that, and they can take the responsibility. And in fact, in a way, they're pushing the government to do something so they can actually tap into that kind of market. So that comes to the JP, that you say, that we the third country in the world after South Africa and Indonesia to join the Just Energy Transition Partnership, ZP. But we're the first to announce our resource mobilization plan a few days ago here at COP28. And negotiation gonna start very soon, yeah, from after this one. And when negotiation starts, then it means, private sector, the investor, the bank system, the government and the community, all the stakeholders, we have to sit down together. And those voices will come to us on what kind of policy the government got to make. So what we have done so far, what I would call concrete, is at least so far, within the very short 2-year term, we get everybody together and be interested in one single thing. And we know that that one single thing will help with our commitment. We don't know yet how much that will help, because it depends on the scale, depends on the speed and the scope of the energy transition activities and projects that are going to come out soon. But we know that it's going to help. So the next step is that, we get everybody together, start the negotiation, and then, start implementing the projects. And we have to learn by doing, and then see that, what we can adjust to make sure that, the things will go smoothly. Past few days here at COP28, in all our size events and meetings and seminars and webinars, that we all talk about how the business sector can help from different perspectives. Yeah, so that to answer the first questions. For the second questions is that what would be the challenges that we have in terms of for this energy transition in particular, and then business engagement? We have many, but look from the government's perspective, we have to look at an overall picture. And as I said yesterday, that in one of the events, that energy transition may be #1 priority now, but it's not the only priority, because we have many other priorities in our countries, and likewise in other countries as well. For example, that we very much look forward to loss and damage fund to be operated, and luckily that we got it a little bit this COP already in the first few days, quite surprising. And we hope that energy transition process would contribute to all those priorities. That's why we got the just part. And the first challenge would be to ensure that just part works in Vietnam, because we always say that our Prime Minister says there's no one left behind, but in fact it's very difficult to do that, because we need to know everybody before we make sure that no one is left behind. So that's the problem. That's the first challenge. The second challenge is that our legal system is our work, our responsibility. It's not complete, especially on financing flows and how to get all the money out there, all financial flow from different investors going to Vietnam, invested in energy transition projects, and still comply with all the existing laws and regulations in a much quicker manner. So that's a problem, because we all know that making a law, making a legal document takes time and procedure, but we may need to create another mechanism for that kind of project. But quite frankly, we don't know that yet. We're still thinking. So that's the second challenge. The third challenge is that when all the new technologies and projects come into Vietnam, we need people to operate that and make sure that it's sustainable. Yeah, so that comes to about capacity building. It comes to about the training for people in Vietnam to get used to that. Yeah, and to upscale that, expand that, and duplicate it from one place to another. So those are the things that it's not private sector can do, or not government can do alone. Everybody got to do. That's why our projects in Vietnam here that Cozy Sung here is leading. We try to do that through our Vietnam Chamber for Commerce and Industry, which is the equivalent to Kaidan Land in Japan or equivalent to business association in other countries, to get companies together. But our resources are limited. So we did some example, and then we asked the companies to do the same for other companies. So we try to multiply it like that. And in fact, in a few subsectors have been doing that already. Not perfect, but it's a good start. So those are the what on top of my head on the two questions that you got, and I hope that suffices. Thank you.
Okay. Thank you very much, Dr. Fui, for your kind intervention. And I think this message is very clear, and including that how challenging it is to squeeze all this transition that needs to be happened within like 7-8 years. That's quite challenging, and all the associated challenges. So ladies and gentlemen, if you indulge me, I would like to just close this session, because all the challenges that we see perhaps will be to some extent carried over to the second panel, which is also a very rich panel for discussing how to finance that as well. So let me just very briefly capture some takeaways from the first session. So in this session, we have captured, bring together the different sort of actors within the private sector, both the manufacturer, but also investment, institutional investor, also government side. And we just showcase in the case of Vietnam, how each player trying their best to gear toward decarbonization, but also the challenges that they face from their positions. And from Ms. Yamanaka, we heard that all this showcasing of specific technologies, including high efficient AC and also heat pumps, and also refrigerant as well, and also this recovering of HFC as an important exercise, and your effort to R&D the new refrigerant. That takes a lot of time, but I think it's worth it. The challenges being the financial upfront, how to cover the upfront financing, and also the time it takes. I think time matters, right, in terms of private sector to acquire necessary permit licensing to scale up the action. So to move from just a pilot. So that's something that also to be carried over to government side as well. And from Dragon Capital, we also heard the examples of some renewable energy investment already up and running. But at the same time, we hear several challenges in terms of the setting up their own standard to evaluate their project in terms of taxonomies and what's green and how we fit into the ESG framework, and also some eligibility criteria and certification when it comes to the carbon credit. That's something also they are having a little bit of challenge. And also coming up with new products, also that's something to be mentioned. And then the other challenges mentioned from Mr. Hui is that, of course, we need to first of all build capacity of people to run all technologies and to run the system as a whole, I think. And also, and sorry, my script is too bad. And also how to make the just part work, and also the legal systems, how to expedite. That's quite a challenge, but I hope you'll be succeeding doing that for the benefit of all the private sector. So more to be said, but let me conclude, and please join me a big round of applause for the panelists for their contributions. Thank you very much. Thank you.
For the interesting session that we just heard. I would like to now invite our second session, the role of financing institutions. And we will have as a moderator, Mr. Masamichi Kono, Senior Advisor of MUFJ. Please come to the front. And we have panelists from different places. First, Mr. Pradana Murthy from PTM SMI. Dr. Megumi Muto, also from JICA. Mr. Hiroshi Ota, Fellow Sustainability Office, Daiichi Life Holdings. Ms. Chikako Matsumoto, Executive Officer, Sumitomo Mitsui Trust Holdings. Can we all squeeze? Yes. Okay, thank you very much. Kono-san, I leave the session to you. Thank you.
Oh, yes. Thank you so much for the kind introduction. Well, I should really thank everyone here at this late hour. It's been a long day for you already. So I'll try to make this as informal and interesting as possible. But anyway, I'm Masamichi Kono. I'm now advising MUFG Bank, and also I'm a trustee of the IFRS Foundation developing those sustainability disclosure standards. But in my previous life, I was more in the realm of financial regulation and supervision, and at the OECD, actually, I was overseeing the Environment Directorate and the Financial Affairs Directorate. So I spent a lot of time discussing those 30,000 feet issues of climate finance. And so if you would allow me, I would just like to, let's say, put this in somewhat of a context, because well, Koji-san mentioned in the previous session that we're now really going to implement what we've been discussing, or what principles have been developed. And yes, there is now a wealth of reports, of recommendations, guidance, but on the other hand, I think we are really finding that implementation is critically important, but also very, very difficult. But then, well, this is a certain estimate, but achieving net zero by 2050, if we are really serious about this, it will require low carbon investments to increase 5-fold in the emerging markets and the developing countries. Now, of course, you can extend this to 2060 or 65. It's really up to governments to decide that. But still, I mean, you are going to really need trillions of US dollars per year. I mean, let's say this estimate says 2 trillion per year. And that is, again, a 5-fold increase that we have to achieve almost as of tomorrow. And on the other hand, there was a pledge made in the context of COP to provide $100 billion of finance from advanced countries to developing countries. But then even this actually materializes, and actually at the OECD we were actually worried that we may not be able to achieve this by the due date of 2020. It looks like it's going to be achieved soon, but this is still really a small fraction of what we need. So what I'm spending time on explaining is that the bulk of financing for low carbon investments, no matter what commitments we have, will need to come from the private sector. And so we really have to really put this into practice in the private sector. And for the private sector to be able to provide the financing, there are, as you would imagine, so many challenges. And one thing I often heard in the past is that there are not enough bankable projects or no economic or social incentives, no regulation, no common definition, and so on. But, well, we're making some progress on those fronts, but and then of course we often hear that there's no shortage of money out there in the private sector. So, but I doubt this argument about bankability, by the way, because if we have the right policy measures, if we have proper coordination between public and private sectors, and a proper structure of risk sharing, proper incentives, including, of course, the use of blended finance. I would imagine that many more projects and entities will become bankable. And so really, we should really find a way of how to accelerate this process of coming up with innovative financial products, better collaboration, and certainly the private sector now, I think we are really interested and enthusiastic about supporting low carbon investment finance in the EMDs. And I can feel this in this COP as well. And so there must be some ways of making this real. Now, so in this session, I'm fortunate to have very knowledgeable experts from various sectors of the private financial industry. And we have Muto-san from JICA, who will be able to provide insights from the official development institution, finance institution side. And we also have our colleague from emerging country where you have actually been working on infrastructure finance on the ground, which will be really important for us to know better what the issues are to do better. And so in the first round, I would like to really ask each of our panelists to maybe explain what you are doing, not necessarily in your individual institutions, but more broadly. I mean, I'm not going to force you to represent the whole industry, but at least maybe your observations of what's happening around you. And also maybe refer to some challenges that you're encountering. And then in the second round, we would really like to talk about the better collaboration, better cooperation, and certainly more attuned or catered to the needs of the EMDs, because of course we often are told that GFANS members are too ambitious or too what's the word, aspirational. But now GFANS, having worked with the JETPs of Indonesia and Vietnam, we are finding that now we really need to work hard to make our pledges real, and this requires some thinking out of the box. So without further ado, may I have Chicago-san from Sumitomo Mitsui Trust Holdings to kickstart this first round.
I was hoping I would be the last one to speak, but yes, thank you, Kono-san. I'm working right now in the private sector. We are the fourth largest within our holdings, like which is the financial group, we have 3 core companies. One of which is the Trust Bank, which is the 4th largest bank in Japan, and then 2 asset management companies. These asset management companies have the largest asset under management in Japan, and then also most likely in Asia too. But today I'd like to talk more about the Trust Bank banking work. So we have, as a group, we have a corporate purpose, which is basically creating, social and economic returns, both of them. And then when we say social and economic returns, it also means like, impact too, both like an economic and social impact. And then when we talk about the social impact, it means that we want to also kind of think about what kind of impact we want to create in the society and so on. But then that whether financing, debt finance, equity investment, when we are doing, we have to also make sure that we are having a market competitive financial returns. So that's what we are trying to do when we also create the impact, whether it's in Japan or the advanced economy or emerging and developing economies. So that's really the principle. And with that regard, we have started the new investment program, which is called the Impact Equity Investment Program, started about 2 years ago, and we have a mandate of deploying about 3.3 billion US dollar worth of the investment, starting last year over the next 10 years. So compared to the trillions of dollars that Kono-san mentioned, it's a really, really like drop in the ocean type of amount. However, as a commercial bank, this and equity investment program, it is a very, very big program. I don't think anyone in Japan has this scale of equity investment program yet. So I'm very excited. And then this resource actually coming from unwinding cross holdings of the equities. Which is also quite an issue in Japan. Blocking, kind of clogging the financial flow within the equity market and then the financial market in Japan. So that's quite a meaningful endeavor, I think, for me. And then so where we are really investing, mostly I think in Japan, but also advanced economy. But then we also started to use this fund to invest in emerging economies, because in our bank, even though we are the 4th largest bank, we still lacking the talent, which have really kind of can properly assess country risk, political risk, regulatory risk, economic risk, and financial risk, all those kind of risks in emerging market. So we are also using the debt finance, but then this an equity program is actually really big one, because we can take absorb more risks, and then we can also kind of expect the upside too. With the debt, upside is really limited. So when we risk is relatively large, it is really difficult to use debt to go into these new market, especially with the decarbonization going on. It also means that the economy is really transforming. Companies or the projects are also transforming, and then lots of new things going on. So we think equity is a good way of testing the water, going in, and then learning by doing, the previous session also mentioned. And so what we are doing right now, we started to also invest Thailand, Vietnam, Indonesia, India, and then also some South America, and then we're also looking into a way of investing in Africa. And I just like to mention a little. Maybe I should pass on. Maybe just a little bit more. In just like in talking about like what kind of a project we are really investing equity investment. Like I went to see one of the examples in Bangkok 2 months ago. We have invested in a real estate development project, which has a really like both like diversity issue, like a theme, and the decarbonization themes. So this is a really a project, being now developed between the airport and the Bangkok city. It is basically developing a new town with a multi-generational residential complex, some like commercial complex, and then like senior homes, some like resort, but then they are also growing a forest together. So the name is like a forestia, meaning that's a kind of a town within the forest. So that the core of the town is really a forest. They are using the really famous Japanese methodology, Miyawaki method, to grow the forest. And then, so I actually went to see the development, and it was actually very, very impressive. Like they're all like science-based. They also involve lots of like scientists and researchers to study the biodiversity there and how to really protect them, and as like they build the town. So that's one thing. In Vietnam, we are partnering with the local bank, and then we created the joint venture of a leasing company. So this leasing company is leasing PV panels. And then now we are also talking with the, I think, our colleagues are maybe talking with the JICA office and so on, but we are also talking with the US DFC. Yes, yeah, to expand this business more towards maybe like kind of a industrial park or the data center and so on. So, and then we are also investing, other area we are investing is investing of a forest fund with a carbon credit. So with that, we are planning to invest about like 100 million probably in total, but we want to do some kind of testing. So we are investing different really regions in the world, and then different type of forest business together with the way of creating a carbon credit. So this is those are the things like we are doing. The point is really like we are looking, when we are really going on, we want to have a long-term local partners, and that's really key. And then I have also have I'm right now working in the private sector, banking sector in Japan, but I used to work in the World Bank group. So when I go abroad, I'm trying to kind of connect our local offices with not only to like beyond JICA's office. I think our teams can reach to the JICA and the JETRO and so on, but then they don't know really well with the IBRD or IFC, other regional development bank. So try to connect them with the local offices so that like they can really expand this kind of work in the emerging market and developing countries. So let me stop here.
Thank you so much. What you just mentioned really sounds like an excellent example of collaboration across the various types of financial institutions and public-private sector collaboration. But anyway, if I may next ask Ota-san to discuss this from a slightly different angle. Well, you're of course with a life insurance company at the moment, but you also have a long background in the Bank of Japan and the Financial Services Agency. So maybe you have a more horizontal view of what's going on. Thank you.
Thank you. Hello. Okay. Well, thank you very much, Kono-san, and thank you very much for the IDFC members institutions to invite me to this panel. It's my great honor and pleasure. And actually, I'm a bit reluctant to speak after Matsumoto-san spoke so great things in investing in Southeast Asia. Well, let me start with some basic nature of insurance business. So our business is, of course, to provide a life insurance product. and we collect insurance premiums and put them together, and we invest them in safe assets. And you see, insurance contracts normally are very long term, and so we have, I can say maybe we have stable money to invest. And we don't need to earn very high return, but we need just safe and sound return. That's the most important thing for us. And we have been doing this business for a long time. We have already celebrated our 100-year anniversary, and within some years, we're going to have 125 years anniversary. So we have been doing this for a long time, and we think we are good at providing stable funds to Japanese leading industries, mostly power sectors or steel companies or chemical companies, those high-emitting sectors. And we have been successfully operating our business or our investment to attain to the net zero goal at 2050 for those investment in Japan. But what we are not good at is that the overseas investment, and especially the investment in emerging markets or developing economies. There are many, maybe various reasons for that. But I think the biggest one is there is not, at least from our point of view, enough products or projects that we can take risks. Well, until a few years ago, we thought that's okay, or there is nothing we can do. But now that money floating to developing economies to act against climate change are significantly insufficient, we think more and more that how we, Dai-ichi Life, can mobilize money without taking too much risks and failing our responsibility to repay insurance payments to policyholders who are mostly low to middle income households, just like us. But very recently, we can started to have some investment. One example that I can share with you today is that we participated in a fund operated by BlackRock, and they started emerging market infrastructure fund, and their number one project is to invest in the solar panel deployment project in Philippines. So we are very glad at being a member of this investment. And I think that the mobilizing capital, as I said, is not advancing as fast as expected. But I think in this COP, at least, or at last, international finance community came to be aware of the gap, the huge gap, and its urgency, and the recognition that we financial institutions can take to play. So as Kono-san said, we, Dai-ichi Life, is a member of the G-Funds, and we are very glad to see that some concrete actions are taking place between the member of G-Funds and MDVs like World Bank. For example, one example is the private sector investment lab by the World Bank. Some financial institutions participated in this lab, and why this initiative is called lab is that it is to share innovative idea to mobilize capital to emerging economies. For example, providing insurance from World Bank, or creating a market to securitize a product that institutions made. So those innovative ideas would help accelerate the mobilization to the emerging economies. So I think there are much more to do for us, and I'm very looking forward to be participating in it. I stop here. Thank you.
Thank you so much. Actually, you gave us some hints about where we can probably enhance cooperation and think out of the box. And so maybe we'll come back to that point in our second round, and more concretely, who can work together better. And in terms of your point about insurance, securitization, all those ideas that in the past maybe we weren't so sure about, or not using it enough. And securitization, in a way, took on a bad name after the financial crisis, but now maybe we can reinvent it for the sake of net zero and sustainability. So thank you so much. And can I now turn to Mr. Murthy? Thank you for your patience, by the way, because I think you will give us some hints about how those financial institutions in the so-called advanced countries or Japan can really support infrastructure development in your country. And of course, you are really there to support your infrastructure. And by the way, when I mentioned $2 trillion per year, that is basically infrastructure investment. And at the OECD, we calculate even bigger figures that will be needed for the net zero transition. So could you please give us your thoughts?
Thank you, Kono-san, and thank you for inviting us here. And I think I would just like to follow up in more detail of what our CEO just gave to us a few moments ago. I think to put into context, Indonesia is not new to energy transition. Actually, we have actually trying to push for renewable energy development and system improvement, maybe since Paris Agreement or even before that. Yeah, but I think right now the push is even greater, and there are supports coming from international communities like JETP. Yeah. I think to put into numbers, our Ministry of Finance already declared that to achieve net zero emission target just from the energy sector alone, it will require around $250 billion US. And JETP already calculated, yeah, at least until 2030, 75 billion will be required to be invested in renewable energy. The rest will be needed for transmissions, grid connections, and smart grid. Yeah, because our grid is not yet connected at the moment, and it's not very smart yet. So to support renewable energy uptake, then we need to have a super smart grid, basically. Yeah. We are a country of 6,000 inhabited islands, and renewable energy sources even more spread out across the 17,000 islands. And our institutions is, as you said, initially it was infrastructure financing corporations owned by the state, the Indonesia government. However, we are already being recognized in our latest financial sector law as Indonesia National Development Finance Institutions, meaning that it already reflected the amount of mandates and the continuous expansion of our mandates throughout the years. As you know, probably SMIs not only finance corporations or business entities, but also we provide finance to municipalities or local governments. Of our 7.6 billion asset, 70% of our financing assets is in the private sector, and 30% is in the public sector. Into the net zero or energy transitions, we have actually started much earlier, which is in 2010. It was our first renewable energy project. And 2016, we have developed safeguard frameworks as well as sustainability divisions formations. And 2018, we have, 2017, we were the first accredited entity in Southeast Asia for Green Climate Fund. And 2018, we established SDG Indonesia One blended finance platform. And that's already some of the $3.2 billion already been dispersed to projects. The most important part is actually the technical assistance to provide bankable and feasible projects. Yeah. I think I can give you many examples of that later on, but also in 2018, we were the first corporations in Indonesia to issue local green bond. And I think we are aspiring to increase our exposure and participation to also someday, yeah, given the right market condition, to also issue global green bond. But at least this year, we have subscribed to a 700 million sustainability linked loan that is also being partial co-arranged by MUFG as well. And that was subscribed by more than 40 banks in the Asia Pacific regions. So these are the kind of innovations as well as our activities to deepen the market, the financial market, as well as in SDG Indonesia One, we have been very active to try to blend technical assistance with concessional loans. I think we have been given concessional facilities from AFD of France as well as from ADB that we combine with technical assistance. We also collaborated in the form of investment grants. Yeah, so we have some investment grants also being mobilized to a project to meet their feasibility. So therefore, commercial financing can comes in. Yeah, I think those are a few examples, and we also being creative, like in the local currency, we provided, like for example, a standby facility to a hydro power developer. So with our standby facility, they can actually increase the credibility or their bond issuance. Yeah. So they go from A- rating, local rating, to AAA local rating, which is similar to ours. So I think those kind of innovations and examples that we have provided so far will be the foundations or capital for us to scale up, because we have been appointed by our government to become the energy transition mechanism country platform manager. It's another blended finance platform, but this time not only focus on renewable energy, but one big part of our energy transition is coal transition. And this will require probably a harder push from financial institutions, including us, to try to finance what people call as stranded assets. Yeah. I think one of the examples, there's the Cirebon Power, which is coincidentally also partially owned by a Japanese entity. We'll try together with ADB, INA, and GAP. We'll try to finance or refinance this asset in the light to achieve 7 years earlier termination. So I think we need to do something on coal because coal is 60% of our fleet. So if we don't do anything about our coal transitions, we cannot actually scale up renewable energy. Sorry to be long, but I hope this gives enough information. So, yeah.
Well, thank you so much. Actually, particularly your last point about this coal phase out or managing the transition away from coal. This really, we can understand, is critically important, not just for Indonesia's energy transition, but also for the whole region. And so the examples that you provided already, I think, will be extremely helpful. So in the second round, maybe I will try to seek your insights into how we can do better. Now, Muto-san, so, well, you've heard all those, well, I would say encouraging new and innovative financing structures, products, methods, and also a willingness to invest more. And of course, we have all appreciated a lot of collaboration, a lot of support from JICA as a development finance institution. And of course, you may be receiving many calls to provide more concessionary finance. And I'm sorry that, of course, with your limited resources, you can't say yes to all of your requests. But maybe if you could give us a certain, let's say, overview of where you are exactly. And of course, later on, we would like to also hear from you what we can do better to support your work, and you can also perhaps provide support for the private sector to be really scale up urgently the investment. Please.
Thank you very much, Kono-san. I think as a development finance institution, I will start talking about the OECD level discussions on blended finance. I've been involved in these discussions at defining blended finance, how to combine concessional finance, development finance with the private sector finance to bring SDGs and climate impact. That I have been involved in that. And certain typologies emerged. So guarantees is the most powerful tool. And then first loss in structures is another tool. But there is also a lot of utility in technical assistance and then grant. And in addition, of course, we have the concessional finance, which is more in terms of concessionality in the terms and conditions. And as Matsumoto-san has alluded to, equity. Right. So within that big world of typology, I think I tried to connect what we have discussed in the previous session, right? I think from Vietnam, the government side, we heard the necessity for technical assistance, not just for the capacity, but for the just part of the transition and also legal framework. And then with the private, from the private sector, we have heard risks in technology, risks in scaling up. So these are more calling for this grants or first loss guarantee types. But also we have heard this more alignment in the taxonomies, and maybe in the next round we can talk about that a little bit more. Okay. Coming back to JICA, what we can offer, we are a very unique development finance institution in that we have a massive technical assistance part, which has been the traditional side of JICA. And there, we have been assisting, for example, capacities, technical master planning, feasibility studies, legal frameworks. So I think we are catering to what the Vietnamese government were pointing to. And the same kind of like a program we have deployed and supported for the causes in the Indonesian case. Okay, so technical assistance, we are strong. But then we don't have a guarantee, we don't have a first loss. What we are doing is really trying to deploy our concessionality in the financing as much as possible, especially not just in individual projects, but in operating in the context of joint co-financing with the Asian Development Bank. We have a facility called LEAP, Leading Infrastructure for Asian and Pacific, and there, with our concessional financing, we do equity participation in that account, and we can do blended concessional financing in individual projects. For example, waste to energy project in Vietnam, and also in Laos we have supported the wind power that will eventually benefit demand in Vietnam. So these are what we have been doing, but we could do more. This is my personal opinion, but maybe we can discuss with the Japanese government with more capacities, maybe not just in JICA, but Japan in general, on guarantees, first loss, these instruments that our European peers, DFIs, as well as US DFC are deploying. This is what I have as my picture. Thank you.
Thank you so much for your very candid explanation, plus your personal thoughts, because actually, first, I'm also glad you mentioned your technical assistance part, because I personally actually was, for a very short period, a JICA technical expert working with the Indonesian Central Bank to develop the deposit insurance system, and I found this really very, very personally rewarding, in the sense that eventually Indonesia did enact a deposit insurance system, and so we were very happy to see it happen. And maybe that's also something that you can let's say, combine with your financing endeavors, because one difficulty we really find in all this work towards providing transition finance, particularly in EMD, is that on both sides, the supply side and the demand side, we don't have enough expertise, we don't have enough data, we don't have basically enough information about which projects can be truly helpful for the transition pathway, and we have to really work together, put things together in a kind of a knowledge consortium. And in that respect, of course, I think JICA really has a potential there to be coordinating this. And in fact, I've also had discussions with the Asian Development Bank, and I hear about our colleagues discussing with the World Bank, also with other institutions. I happen to have a meeting with IFC here in this COP, we're all talking about combining our knowledge, combining our ideas, putting together a credible data repository, and so all those really could lead to results based on stronger collaboration amongst the people involved. So again, coming back to our experts, could perhaps each of you really mention where you think we can do better, and of course the whole topic of this session being closer collaboration, what's really needed. And by the way, for this thing about the Japanese government, I think we should really ask the Japanese government to give more capacity to JICA to do its job properly. So anyway, I don't think this is broadcast. So, Chikaku-san, could you start again?
I think as Muto-san mentioned, you mentioned about basically, financial tools to support the blend, kind of a private-public, collaborations. And then in order to use those different kind of financial tools really effectively, I think when I was at the World Bank and I was doing risk management and so on, so when you are investing or financing the project, I think it's important thing is really like kind of identifying different kind of risks involved in the project, like starting with the financial risks, but we have also country risk that would also include the regulatory and then policies, and then many different kind of risks also within the political risk, but also commercial side. When you have a kind of a public, project, you also have a demand risks too, supply side too. So what are the kind of risks that we are really talking about? And I think also from the private sector point of view, again, we don't have really many talent who understand the different kind of risks involved in these kind of public, private, like collaboration project in emerging and developing countries. So that's something like, what we need a specialist doing this kind of work. Then also among the private sector, there are different kind of players with a different kind of a risk appetite. So once risks are really clarified, then different kind of players can come in. I'm going to take this part of the risk, that kind of the risk, and that would be, I think, important things. And another thing is really like maybe policy side work. We like in the financial side would say like finance wouldn't solve all the problems. Finance is just kind of one means. For the finance to really work, the project need to be ready. For the project need to be ready, you need to have a kind of a policy ready. For instance, like maybe like we need probably a common framework for a preconditions. Like maybe what kind of policy need to be there for public, private money to come in. And maybe transition taxonomies or the CO2 data disclosure policy, something like that. And then maybe the quick last one is that depending on like the emerging market or the developing market, we probably need to focus on whether mitigation versus adaptation. Maybe I was also in the group, we are discussing about also a little bit about Africa. Africa expert was, was really saying that like, we don't have anything to transition from because the CO2 emission is so small. It's only like, as a whole continent, it's only 3% of the global GHG emissions. So for Africa, probably most of the countries, what we really need to do is the financing for the adaptation. But then for lots of emerging economies, mitigation, right? So maybe the clear, categorization also for a private sector to come in, that would really help, I think. That's all for me.
Thank you again. You have a very long list, but on the other hand, all those are important. And I'll try to find some ways of answering your, let's say, requirements of risk assessment, risk sharing. All those need, I think, creative thinking. But actually, your mention earlier about the equity investment that a banking group is doing, this is really already quite new, because of course we in the past were more or less thinking in the sense of debt finance, and of course now debt is considered as too much in so many developing countries. So we do need to find that patient first loss or patient equity that we can find. Thank you. Ota-san, could you please?
Again, there's not much to say after Matsumoto-san elaborated so much, but maybe from the viewpoint of the risk management or risk sharing, I think you see in the textbook of risk management there are 4 approaches of risk management. That is to avoid risks, or to mitigate risks, or to transfer risks, or to take risks. And I think as a world citizen, avoiding risks in investment in emerging economies is no longer an option that we can take. I think we have to use the other 3 approaches of risk management. So first, mitigate risks. I think to mitigate risks, information is indispensable or fundamental. I think for example, MDBs or developing financial institutions have much more information on the economies of developing countries than an institution like us. So I think the information sharing between the different stakeholders is absolutely the key, and also sharing, a common data by using the some kind of the data depository would be an option. So in this viewpoint, the newly created net zero data public utility made by the GFANs and also some public authorities is a great opportunity to explore, expand our information sharing or access to data. And then also the disclosure is also important. So in this point, the newly created IASB's S1, S2 standards, when it comes to be implemented, I think it's going to be a great tool for us to really understand where the risks are. And third approach, the transfer or share risks, is also the point that we can cooperate between the different stakeholders. So how much or to what extent banks can take risks, or to what extent national government can take risks, or philanthropic entities can take, or insurance companies like us can take risks. So of course there is no single entity which bear all the risks, but we have to share the risks, and with further discussion, I think the best sharing would be achieved. And finally, take risks. I think my company has been very prudent or slow to take risks. But I think nowadays we see the challenges clearly, and we have money to invest, and we have a willingness to invest. So each one of us can maybe take a little bit more risks to solve the problems in the emerging economies. And to do so, of course, we have to get regulators or supervisors involved. Otherwise, we would be scored by the supervisors. So I think of course, in this point, multi-stakeholder approach is fundamentally necessary. I stop here.
Thank you so much. And actually, thank you so much for mentioning the net zero data public utility and also the ISSP standards, because I'm involved in both work. But anyway, Mr. Murthy again, I think you really know best amongst us about how to unlock the various what's the word, gateways, or maybe find ways of our upscaling quickly financing from outside of Indonesia into really something that would help your energy transition. And of course, we're quite mindful of this difficulty of coal phase out. But I mean, I really believe that we can't just go on pointing fingers at each other. It's really only through closer dialogue, closer understanding that we can somehow make this happen. So could you give us your ideas and maybe even some critical comments on what others are doing?
Yeah, thank you, Kono-san. I think all will start from government planning, government planning and policy. As I mentioned, that the government and PLN has tried to push for a greater energy mix coming from renewable energy for quite some times now. The existing electricity business plan that PLN has issued, they claim as the greenest ever. So Pak Darmawan Prasojo, every time he was on stage, he would always brag about this. But again, energy transitions needs to be clarified further, and the government is recognizing that they are currently preparing the newest energy sector, national energy sector general plan, between 2023 to 2060. So we hope it's going to be issued soon, because 2023 is going to be expired in a few days. The draft is already ready. I'm not sure what is the momentum or what is the last remaining issue the government is thinking. But this is going to be important because the predecessors of this long-term electricity plan is much shorter in duration. Now it's going to be until 2060, which is until net zero emission is achieved, right? So it's going to be having, when we see that, we're going to have a comprehensive understanding of what the government is trying to achieve on the outset. And that's going to be followed through by PLN revised RUPTL, or 10 years electricity business plan, because PLN actually holds around 85% of our electricity system. So the PLN business plan is long-term business plan is really important. Because it's going to detail the programs that PLN is going to launch during those period. in much more detail than the government long-term plan. Yeah. And this is going to be even longer than, because usually it's 10 years plan of PLN. Now it's going to be 2024 until 2040. Yeah, so it's 16 years. So I think why PLN is aiming for 2040 because they said that renewable energy accelerations required a long-term process. Yeah, if you build large hydros or large geothermal, it will probably require 5 to 10 years of development. So I think PLN is quite right that their business plan should be longer than they used to. Yeah. So we are waiting anxiously about these two plans this December, as well as probably PLN will issue the revised RUPTL sometimes in the second quarter of next year. But on the outset, I can say that it will have a much bigger renewable energy investment opportunities. Yeah. Again, the base load will still come from hydro and geothermal. But sometimes maybe within the RUPTL, the new RUPTL, Indonesia will probably start seriously thinking about even nuclear. Yeah. And super smart grid is also going to be key to that plan. Yeah, to connect all major islands in Indonesia. And the coal transitions. Yeah, that will involve some early terminations, and some perhaps retrofitting or repurposing of coal-fired power plant into, well, this is quite controversial still, because PLN and our government is still thinking about using gas, but although it's still much cleaner than coal, then government will need to make sure that the carbon neutrality is still achieved. Yeah. So I think a mix of technologies or advanced technologies will be considered. Yeah, there. So that is going to be the anchor of our activity of all the financing sectors, including PTSMI. And PTSMI as National Development Finance Institutions will be quite central in position, because we are a local intermediary. We work closely with bilateral agencies like JICA, commercial entities like MUFG, as well as MDBs, and even philanthropy. Yeah. So we work in collaborations all this time, and I think we need to work even harder in this spirit. Yeah. I will stop there. Yeah.
Thank you so much again for your detailed explanation of what is in train and what you intend to do, and you meaning, of course, not yourself personally, but Indonesia as a country, and that will certainly help us formulate our own strategies and also our ideas about how we can best support. And so this really conversation already is, I think, is really quite useful. And now, well, we're almost over time, but well, I think Muto-san, you said almost everything you were going to say, but maybe a final remark, and then I'll just wrap up. Thank you.
Yeah, thank you very much. Just 2 points on maybe the quality side of, in particular, infrastructure. Maybe it isn't purely quality, but following up on Indonesia's really need for the coal transition, I think we have to have a common consensus among all the stakeholders on what would be the definition of that coal transition, maybe especially the speed and the technological change. And I think there has been a lot of endeavors already, like MUFG is doing the Asia Transition Finance study group. We will be members. We were observers, but now we will join the discussions. And then
You're welcome.
there's this GX consortium by the Japanese foreign financial services agency that will be launched, and I think there will be a lot of exchange on the common perspectives. And I think in our regional market, the Monetary Authority of Singapore or other entities are really willing to collaborate in that front. So that's one. And then another thing is if we wish to create an asset class with all this thing, not just exchanging among ourselves, but really utilizing the market mechanism. We need some leveling, and I wish to mention that there has been a lot of efforts in the among the DFIs and the commercial financiers on the definition of quality infrastructure, and there's already a system called a Fast Infra. The CEO is here. Yeah, and we can create synergies with that platform as well. Thank you.
Thank you so much. So I think our time is up. I don't think I can do a good job of summarizing everything that Fukuda-san did it for the first session. But anyway, well, I think each of you, you really mentioned some ideas about how we can do better in terms of collaboration plus innovative or creative thinking. Also, it boils down really to having a proper knowledge base for assessing the risk, managing the risk, and then, of course, sharing the risk. And we can certainly build structures around those products that we can use to really share the risk, while, of course, not being, let's say, wasting the limited resources that we have. Well, of course, we'll have to take the stigma off whatever securitization or other means that we used in the past, which didn't work out well. This time we have to make it work. Maybe it will basically boil down to really the need to invest more in actually the dialogue, the knowledge sharing, and also the creating a consensus around what is needed for each country. And I'm sure for each country the situation is very, very different. Anyway, so apologies for not being so well organized, but thank you, everyone. Thank you to our distinguished panel, and all the best.
Thank you very much for the moderator for the great job. Okay, so I think we're closing here officially by Dr. Muto. The last word. We're over time, so quickly.
Very quick word. I think I personally came here with a kind of like a mixed feeling, kind of like a really a bit of doubt about what kind of a cooperative, I mean, a sense we could create together. But this is the magic of IDFC, International Development Finance Club. We create a chemistry of collaboration and to move forward. I think we have shared that, and we will go forward together. Thank you very much.
Thank you very much for all the participants also for coming today, and we close this session here. Thank you very much.
Adaptation. developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox.
Good, hello everyone. Good afternoon, maybe I can say good evening. Very happy to be here. For those I don't know, my name is Priscila Negreiros and I lead the Cities Climate Finance Leadership Alliance. So let's keep the energy because it's 6:30. I imagine that some of you, not all, are a bit tired, but we're talking about a very, very relevant topic. So we're talking about national development banks and cities and how we can reinforce this strategic partnership. So as we're here making a bit of a reflection, we are at COP at the Cities Day, right? Like I think a lot of you probably already talk a lot about cities, and this specific COP has brought a lot of attention to cities. We had a local climate summit for the first time. We had more than 220, maybe I don't have the right number, but that last number I heard, more than 220 mayors that came to COP this time. This morning we had a ministerial about cities, and that only shows how cities are finally coming to the agenda when we are talking about climate, and more than that, how cities are getting more and more ambitious towards climate change. And that's exactly what we need, because a lot of the change and most of the change will happen at the local level. But we're still facing some hurdles on the other side, and I think I'm gonna steal a phrase from Josué Tanaka that said that actually we need to still improve a bit of our gearbox in terms of financing. Like all the money that we need to be flowing towards climate action to cities is not necessarily getting there, and I think a lot of you work and know about it. So I think the big question is, how can we make it happen? And today we want to discuss the role of a very important actor, which are national development banks, and how they can intermediate different private finance, international public funding, and then they are closer to the cities. And we want to hear from them and talk about it. So I'm not going to speak a lot more in this intro because we have amazing opening remarks from a very good friend, supporter, and leader on this front when we are talking about cities, Vera Hondenhoff, who is Deputy Director General for International Climate Action at the Germany Federal Ministry of Economic Affairs and Climate Action, and Vera will do our opening remarks. Thank you.
Thanks, Priscilla, for this very kind introduction. And hello, everyone, colleagues, friends, ladies and gentlemen, people online and here in the room. Yes, it's the Cities Day, and cities, like countries and like all of us, if we want to scale the finances, we need scale the climate action, we need the appropriate and right finances for that. So, and this is especially true for the urban space. And so IFC has estimated that investment needs of 2.5 trillion US dollars annually would be needed to actually close the urban finance gap. And CCFLA indeed has estimated that investments made in 2017 and 18 were only about 348 billion. So this is actually a fraction of what is needed. It's very blatantly obvious. So what can we do? All of us, so we decided to focus on urban climate finance as one specific sector. And we started this, we have a long history, but one of the bigger things we did was at the UN Secretary General Summit in 2019. We, together with many of the initiatives and people here in the room, also kickstarted the initiative Leadership on Urban Climate Investments called LUCI, which is just a framework for more initiatives to leverage climate finance for cities. It's basically several initiatives along the urban climate finance value chain to raise the money and interlink and work hand in hand. And this is also what the CCFLA does, who is sort of the backbone of LUCI. So there are more than 20 initiatives in the so-called LUCI, and we have supplied up to 120 million to them as the German government, and this includes the GAP fund, where, well, the funding, actually the German government, 120 was from us, our ministry, and to the GAP fund we provided 50 million, and the government, together with Luxembourg, we have provided an overall of 104 million. So this was actually over the main target goal. And we have, with this finance, we have currently, through LUCI, capacitated 884 cities. The goal is 2,000, so we still have somewhere to go, but we still have some time. And we have linked 277 projects to finance. Here the goal is on 1,000. So you see in Lucy, but overall there's still a lot that needs to be done. And when we looked at Lucy, we already saw that there is an important role for the national development banks back in 2019, and that is becoming ever clearer that the national development banks have a key role to play, especially also in the global south. And why is that so? It's actually because 37% of public climate finance comes from national development banks. Or development finance institutions. They are key players really if we want to enable investments also in the urban climate space. Just a bit of a landscape. There are 250 NDBs which exist globally. NDBs hold assets of $5 trillion US, so that's 5 times as much as the MDBs. And they have a comparative advantage to the MDBs, amongst others, because they have a knowledge of the environment, of the local environment and the market, and they have the ability to lend in local currency. So, but they also face barriers. They have financial constraints. There are knowledge constraints, policy, legal, and regulatory barriers. And this is what we want to tackle with a new project that we are proposing, which is called NUCA. You see, we have an affinity to these types of names, but this is a new project that we're kicking off with 20 million euros of funding, and we intend to kick this off next year. It's a strategic partnership with the AFD, the IDFC, 5 national development banks, and the City Network C40. The countries we want to work in are Brazil, Colombia, South Africa, Indonesia, and Mozambique. And the CCFLA is our knowledge partner. So we think we've got a really, really great partnership going there. The core mission of NUCA is to strengthen institutional capacities of NDBs, catalyze financing from public and private sources for urban climate projects, and provide project preparation funding to select projects. So we're going to embed 5 experts to the partner NDBs and undertake systematic capacity building measures, also through project preparation funding, enabling partner NDBs to bring concrete and climate smart projects into the world, off the ground, and into bankability and implementation, often picking up projects that were supported through the GAP fund also, so along the whole investment value chain that we created through Lucy. So we are really, really happy about this project. And we are really looking forward to its results and how much it can leverage, and looking forward to all the people and cities it can make happy and make them better, more resilient spaces to live in. So with that, thank you very much, and I look forward to discussion.
I might take this on. Thank you so much, Vera, for giving this great overview about the role of the NDBs and all of the programs that Germany is supporting and making such a difference for the cities and the cities' climate finance space. So we're going to kick off the debate, and we're going to do it by the beginning. So understanding the role of cities and how actually cities are critical to achieve the goals of the Paris Agreement. And for that, I want to call Andrea Fernandes, Managing Director of Climate Finance Knowledge and Partnership from C40 Cities. Welcome. Please sit. I think you can sit here. We're going to be great. Yep. We're going to have Laura Piovesan, Deputy Director General of Projects, Director from EIB, European Investment Bank. And we also have Mayor Celius Bring, Executive Mayor of Chuan. Thank you. I think you can say that. And then we're going to have online, hopefully he's there with us, Samuel Lefebvre. Oh, yes, he's here. Samuel, great to see you. Senior Project Officer of the Cities Department of AFD. So it's late, and we want to have an open conversation that we can learn something new. And I'm going to start, so please feel free also to raise hands, ask questions, and let's dive into it. So Andrea, let's start with the challenges. And we always like to start on that front because we need to understand what cities are facing to access this finance. And you have been working for years within C40 cities and discussing this issue. So I would love to ask you this. Where are the biggest challenges, actually?
Thanks so much, Priscilla. And thanks everyone and those online. So I think with the challenges, I think it's important to keep in mind the governance context of cities. So you have cities with very different situations. We've got cities that can issue debt, take on bonds, and we've got cities like our co-chair of C40 Cities, Mayor Aki Sawyer, who is completely constrained. She cannot take on any private or public finance. She cannot even issue building permits. I mean, she's very, very, very constrained and has to turn to incredibly innovative models to get stuff done and really receive grants, because that's what she can do. So I think the governance context does vary between city to city, but generally speaking, the type of challenges cities face are, first, these fiscal constraints, these policy constraints that might limit what a city can do, how much debt it can, if it can take on debt, how much debt, what permission does it need to get in order to take on that debt, and then constraints that may impair that city's ability to have strong financial health as well. Second, there's an issue around capacity, and here it's understanding, what makes a bankable project, what would make this project attractive to financial institutions. We've got, the second panel is going to be with those institutions, and I think the cities sometimes don't understand, what ticket size, how does it need to be developed, which banks offer the sovereign versus the sub-sovereign lending, and where to turn to for support. What are those options available? And third is I think sometimes the most difficult one, which is the issue of the political alignment. A lot of our cities do depend on national government to either do the sovereign lending, but even if a city does want to, cities who do have ability to take on their own debt sometimes still need to get to national government to get the okay. And then you've got the conflicts between, capital city mayor, maybe they're from a different political party, maybe they don't get that support. We hear that all the time from our cities. We talked to Green Climate Fund, they wanted to support us, but then our national government would not submit the application. Or we talked to this bank, but our national government won't support it. So this issue of political alignment is really difficult and a hard one for cities to overcome. So we'd really like to see some of this become less about the politics and more about the projects.
Great, Andrea, thank you so much. So I hear regulatory issues, capacity, information, political alignment. So cities actually need partnership. They need organizations and institutions that are helping them to overcome. And then, Samuel, I'll go to you, and we definitely can see you are in Paris based on the from the view behind you. And we want to know a bit more of the role the AFD plays in accelerating climate action in cities, and how, can you solve some of these issues that Andrea raised?
Thanks, Priscilla, and thanks for the opportunity to speak on behalf of AFD. It's not snowing here, don't worry. So apologies for not being in person in Dubai with you. So to answer straight to your question, I need to remind that AFD is an interesting animal. We are an entity that is at the same time a DFI, a development finance institution. And so we work as a financier of the city strategies of urban investments, but we are also a technical agency. So we are providing advices and supporting the cities also in the preparation of these strategies and formulation of pipeline of investment. And I'd like to underline why cities are so high in our agenda. Why do we finance them? I think the main reason is definitely that because national government cannot achieve the goals of the Paris Agreement without the contribution of the cities. It's a very important fact. As it was said by the Secretary General of the UN very recently, he said, cities are where the climate battle will largely be won or lost. and we really acknowledge that. I think the mayors, they have the most difficult jobs. They have to reconcile development with climate issues. And it's also the mandate of AFD to do so. So we really think that there's a beauty in the place-based policies. Place-based policies, it's actually working through cities. When we work through cities, we are tackling at the same time mitigation and adaptation issues through them. So it's a very key partner to us.
Thank you so much, Samuel. And I think you touch on a point that I'm going to follow up with you, Laura, on the technical side. So on the preparation of projects, and EIB have been actually investing a lot into municipalities in Europe and also outside Europe. And I wanted to ask particularly generally on how EIB has been working on these problems and the challenges the cities are facing, and also asking a bit about the GAP Fund. If you could explain to people here that don't know the GAP Fund, how this project is key into helping cities achieve their climate ambitions.
Thank you, Priscilla. And indeed, I think we have heard a lot today about the centrality of cities in the green transition, but also in addressing climate risk and adaptation measures, and also the significant needs, but also the willingness and the interest of financial institutions to provide finance to this type of projects. Nevertheless, indeed, there is projects are stuck. There is a lack of implementation of this project. They're not proceeding at the speed that everyone would like to, and at the scale that we would all like to. So, what is the issue? We discussed about the need to provide technical assistance and to provide that technical expertise and advice to develop these projects, but we do see also a need even earlier. So the need to engage earlier with the cities and different players to at the level of the pre-feasibility studies. So to really help the cities design the strategies that will allow to bring the projects up to speed, and make sure that these are embedded in the national strategy. So this gap at these early stages is exactly why the City Gap Fund, City Climate Finance Gap Fund, was established by EIB and World Bank and GIZ with the support of the German government and the Luxembourg government. So it is a very much needed, it's filling a very much needed gap, and this is demonstrated also by the success of this fund so far in terms of receiving and screening more than 400 expression of interest, so big number of interest, and we have so far supported some 58 cities in 27 different countries. So we do see a very important need, and we do see an important role for the City Gap Fund, and this is also the reason why the City Gap Fund is being, has been increased recently.
Thank you. That's very important, and I think we're always talking about bankable projects, and now I heard that I cannot say bankable projects anymore, that we shouldn't use this expression. Financial projects, so we're finding the best one to substitute. But so it's very, very important that actually the cities have support, but either way, we are still facing challenges, and I think we are very happy to have you with us, because we need to actually hear the voices of who is actually implementing, if we're always talking about implementation. So love to hear like the challenge you're facing on the ground and your experience on having access to climate finance specifically.
Thanks very much, and thanks for the invitation to participate in this panel. The city of Tshwane, where I'm the mayor, includes the capital city of South Africa, about 3.7 million people, so a city solidly in the global south, to use the old terminology, the developing world. In essence, South Africa and perhaps many other many other countries in our context is in the midst of several transitions. We're transitioning from a one-party dominant democracy to one where most of the cities will be run by coalition governments. So you mentioned the misalignment sometimes between national and subnational policy. So that's one transition. The other is that South Africa has a national energy monopoly, which is financially and institutionally coming apart. Various efforts are being made to keep it afloat, but our entire system of electricity distribution was based on that monopoly, so cheap coal-fired electricity, and that's what our economy as South Africa was industrialized on. That's the basis for our industrialization as a country. And municipalities made at least a significant part of our revenue through the distribution of electricity. Now we have rolling blackouts. The availability factor from that national energy monopoly is no longer there. And the burden of coming up with alternatives falls squarely on cities where our industries are, where the drivers of our economy. So cities that have traditionally never been players in electricity generation are now having to become that. And that's an important part. So it's challenging. The collapse of this national energy monopoly is challenging our own funding model. So the essence of what I want to say is that we need rebuilding. And at this crucial juncture, the question is going to be, what opportunities for rebuilding green and rebuilding in a sustainable way to deliver services in a carbon neutral or at least a lower carbon manner? Because we can rebuild in the other way that sends us in the other direction. And often that is the easiest course. That's the most bankable course sometimes. And the question from a regional and global perspective is, what are the incentives and the institutional mechanisms that we're going to create to encourage cities with responsible leaders who want to go sustainable and carbon neutral to take that avenue. And many of the initiatives mentioned here I think will contribute to that.
Thank you so much. That's very, very interesting. We cannot talk about urban climate finance without talking about how revenue is actually going to be created and how can you structure your own local economy. And this is key. So I'm going to put Andrea on the spot and ask how C40 is supporting cities to access to finance based on everything that we heard. Sorry.
So as you've heard from the mayor, this is the top issue for all of our mayors. I think 25 mayors, something like that, to here to COP, and a number were invited to very specific brunch where they all had, were allowed to just share, what support they needed, what's been really helpful from C40, and finance came up all over the place. This is just the number one issue. So we try to help however we can, and that's through organizing peer-to-peer exchanges. The mayor will know he met another mayor today on this issue of revenues and how to strengthen them. But try to make those connections between cities, between mayors, but also between the technical teams so they can learn from others. We hold finance academies where we show cities what are different business models you can use, what are different funding sources to pay for your projects, what are different finance mechanisms, what are the options. Can we connect them to either experts or technical assistance facilities like the GAP Fund to support them? We also do investor roundtables so we can hear from the banks, this is what we're looking for, this is how you need to develop a project that will get picked up by this institution. We do research in some of the innovative areas in this space, and for example, around we've done research in the past around green banks and how can cities set these up, around EV charging. So trying to capture the learning and share it, and try to bring cities to make these important connections again to the financial institutions, to the funds out there that can support them in project preparation. We also have our own project preparation facility called C40 Cities. Finance facility, CFF, and then finally, I think the advocacy side is incredibly important. So we are here at COP saying that cities need support, they need resources. This has been one of the key messages from our co-chair and all of our mayors, I think, in many of the events that we've been here attending this week. And that includes everything from the report we just released with CCFLA and the Global Covenant of Mayors, looking at how multilateral development banks need to support cities, and what is the urban angle to MDB reform. How can we bring urban as a strategic component of MDB reform? We are part of the Urban SDG Finance Commission, which is trying to scale up finance solutions and look at what these might be, including things like global guarantee mechanisms. So we're here advocating on behalf of cities and trying to help them make those connections.
Thank you. Very, very interesting. Samuel, I'm going to go back to you, back to snowy Paris. And you mentioned something that actually AFD is an animal, right? Like a big one that do different things. I want you to tell us a little bit more about the different instruments and mechanisms that you have available, and how can you better serve cities, particularly in developing countries, and like solutions that AFD has.
Sure, thank you. So as we can see with the mayor of Tshwane here, there is willingness, there is ambition of many cities to move forward with the transition, but as underlined by Andrea, they face the issue of availability of funding, and also I need to say, I think the shortage of expertise to design and deliver the local green project investment, and specifically in South Africa, I know there's this issue of the just energy transition, which is quite strong. So money is one thing, but as a city, you also need, I would say, a pipeline of catalytic projects to be both well formulated and then implemented, and it requires expertise. So I think this is where innovative financing should come. This is where a stronger involvement, I think, of both international, like us, but also national public development banks, it's highly needed. We have many instruments, but first and foremost, what I'd like to underline is that we need, as banks, to have a continuous policy dialogue with the cities we work with as partners. So really, it's technical dialogue, sector dialogue, but public policy dialogue with the cities we work with. We are not only financiers, we are discussing, with cities, and it's very important to work both with capital and intermediary cities. In AFD, I will not name all the different instruments that we have, but just as categories of instruments, we are one of the few bilateral banks that can finance cities directly at our own risks. And it was mentioned today, we can lend in local currencies, which is a very, very important aspect. So we have numerous cases in many countries, and in South Africa, my dear South Africa, Durban and Cape Town, not yet Tshwane, but it can come. We also have set up, it's an important point I want to underline, it's very important to have guarantee schemes available, and we have guarantee schemes available to public banks and private banks. So the banks that wish to finance cities in a country for a specific investment project with a climate ambition, we have a guarantee scheme. And obviously, you quote the GAP fund, there's this big project preparation fund. We also have our own tools and participate in bigger tools for project preparation. Project preparation is very important. It's a kind of, working on the formulation of project, you contribute to the de-risking of this project. And for a bank, it's important. You unlock the funding, and not only the funding of public financier, but if you have a proper setup, you can also attract private funding. And last but not least, I think we have programs that in some countries where it's still very centralized, to try to strengthen the fiscal and financial autonomy of cities. That's what I would call the true decentralization. so that the cities, they can achieve their mandate because they can mobilize their own fiscal and non-fiscal revenues. I would stop here. I'm too talkative, so sorry.
Samuel, basically you are working all the fronts. So, but a lot of the points you mentioned, I'm sure we're going to touch base on the next session about direct funding, local currency, and I'm sure a lot of the national development banks that are joining us will discuss it and their key role on that front. But I think we still need to go back a couple of miles back to understand a lot of the cities have issues on starting the projects. And I think, Laura, that's where the GAP Fund plays a key role, as you're mentioning to us. And now that the GAP Fund is on the world for a couple of years, I guess. So like, what are the lessons you have been learning working with so many different cities in so many different areas of the world? And like, how can we start better, let's say?
Thank you very much. No, indeed, what has been said so far this evening really, resonates with us. We do see all these challenges in a way reflected here also in our experience in the GAP Fund. Now, I mentioned that the GAP Fund operates in this pre-feasibility area, and the first lesson I think we learn is the importance of, yes, we are bridging a gap, but we need to keep being bridges, no? So we need to keep building these connections that you were mentioning with the actors, with the financial institutions, with the donors, and the different actors that are playing in this area. So first of all, building this connection at a very early stage, because this allows to at a very early stage identify what are the requirements, for example, to be financed. No? The second lesson is it is very important to be present on the ground and build this long-lasting relationship with the cities. And again, here we take advantage of EIB, World Bank, and GIZ experience with the cities, and we maintain this dialogue in order to be able to together identify, propose these projects that can be then advised by the GAP Fund. So continuing to build a bit of a pipeline, we mentioned several times. Now, the third lesson is that we do come across projects of very small sizes, and as a bank, it's always difficult to handle those. Now, we have some lower limits, so we do need in this ecosystem actors that play as aggregators on one hand, but also as a conduit of these financial flows, because we heard that different cities have different capacities to take on board the loan. Some can, some cannot, some can only partly. So it is very important to find financial intermediaries that can also have and incorporate financial intermediaries that can have this role. And because of these three lessons, I think it's very important what was mentioned also by Vera in her introduction, the role of national development banks, because we see national development banks as being critical in helping to bridge all these three aspects that I mentioned. They are locally rooted, so they know the risk, they know the market actors, and they really have a chance to aggregate all these smaller projects I was mentioning. So an important role with the National Promotional Bank, and this is also why the City Gap Fund will in 2024 strengthen this capacity building with National Promotional Bank through training programs, which are of course complementary with FENUCA. So I think both together we have quite a lot of firepower to strengthen this important, let's say, missing link.
No, thank you so much. Linking, so, and we are already starting to talk about national development banks, but we're gonna go deeper then in the next session. But like linking to
what you just said about the role of these public banks, right? Like national and potentially regional. And I would like to ask you, Mayor Cyril, like, what do you think should improve? Like, what do you need to change on while working with these intermediaries? Like, which is the focus, so we can streamline more climate finance towards the city? And like, if you could tell us a bit about your experience. Oh, yeah.
Thanks. Yeah, I'm committed not to be the guy that comes to complain about things, because everybody just shuts off when people just come and complain. Give me money, give me money. So let me just start by acknowledging that in our context, whether it be the city or the region, there are institutional things that cities must do in order to show that we're serious. So, for instance, our participation in the climate budget initiative with C40. So align your priorities, overlay them, and frame them in terms of sustainability. That's one thing. Second thing, clamp down on corruption, mismanagement, inefficiencies. Third thing, secure your income streams as much as you possibly can, because we can try and negotiate and say we can't use the ordinary measures of creditworthiness for green projects and all that stuff, but you do need a measure of credibility, and that we're committed to, building the capable state. But then on the other hand, in our context in particular, we need, as Samuel has said, far greater autonomy. Just to give you one small example, national government recently put out a white paper on EVs, and cities weren't even consulted about it. But where is the EV infrastructure, the recharging, where is that going to come from? In your white paper. So that sort of engagement is critical, especially where we are currently as a country, and the role played by cities. But then further to that, and there's tremendous potential. So for instance, with DBSA in South Africa, the Development Bank of Southern Africa, there is tremendous potential using them as an intermediary, already a strong, credible institution. And you know, if funding through them can be improved, local currency denominated loans and all that stuff. And we must even look at other ways of managing potential risks. So for instance, one project that we're partnering with the DBSA is they are the implementing agent on an upgrade of a wastewater treatment plant called Rooiwal in our city, where having them implement the project is basically a way of mitigating certain risks which arise in our own supply chain management system. So all of these things we have to consider, but the autonomy of cities and the centrality of the role that cities play, I think is crucially important in aspects of policy and you know, doing business institution to institution.
Thank you so much. I think we won't have time for questions, but potentially we could have like an open debate at the end of the full session. But although my notes don't make absolutely no sense, I will try to, very busy, a lot of information, I'll try to summarize. So I think we definitely see a lot of ambition from the city. We see here from Mayor Chiswan, but from everything that is going on at COP. The cities need to be engaged throughout the process. I'll like lean on what you just said, throughout a national process, international process. That's what we are trying to do here at COP, and be engaged throughout the way, because they actually need to be consulted and participated through the system. We need changes, and cities are facing political hurdles, fiscal revenue, and need to rebuild the system to be able to deal with climate change. We need a lot of early stage support, so I hear that too. And we need to have very different offers. I think Samuel brought up that on guarantees, working with cities and local currency, so actually responding to their needs. And for that, the role of National Development Bank is key. And that's the best segue for me to thank you, all of our first panel participants, for their insights, and actually call Josue Tanaka, who is the C40 Senior Advisor, and gonna walk us through the second part of the event. Thank you.
Thank you, Priscilla. So, given the hour, it is time to go to a hyper-stimulating topic, and in a hyper-stimulating way. So I'm not going to dance or do anything like this because that's probably shocking, but I think, perhaps just a few words to connect, the two sessions we had. I think Vera, in her introduction, mentioned some numbers, which I remember. I think it was in Heidelberg that these numbers, came, right? The 2000 and the 1000. And I believe that, one of the numbers you mentioned was 244, was it, out of the 1,000? Something like that. Oh, it was about that. But let's say about 1/4, right? And I think that that's the challenge to the extent is, how to move, the number of projects that are actually financed, right? So I think Laura also very helpfully in her comments made, the connection to this next part, which is really then, to cover the role of the national development banks, and also to give you a notion of what was mentioned. I will leave the next speaker to explain to you what NUCA actually means, right? But I think if I could first call Mustafa Kleischer to come here from IFD, and he has been a very hard-working man that I have seen over the, I guess it's a few years by now, developing, right, this program. So we want to hear everything about it. Thank you.
Thank you, Josué, and good afternoon, everyone. I am Mustafa Klesh from the facility for the Climate and Biodiversity Facility of IDFC. Just maybe a few words about the Climate Facility is the operational arm of IDFC, helping members to through knowledge sharing, capacity building, and joint opportunities like the one we are talking about today. To improve their capacity to address the issues of Paris Agreement and the Biodiversity Convention. Just maybe to say, so the NUCA program, the NUCA means National Development Bank's Urban Climate Action Plan program, is part of the activities of the Climate Facility, is part of the opportunities. The idea is to have some kind of operational activities with the members because the banks don't like theory, they like practice. So it's very nice to make training and so kind of activities, but I think that they learn more with concrete operations, and this is part of the work done by the Climate Facility, and it complements other activities that we are doing. So for this project, we work very hard with not only me on the Climate Facility, but also our colleagues from the banks. And also we thank also the DFIs that we had a lot of discussion with them, and also the other partners on the IKI urban programs like City Gap Fund and other, World Bank, EIB, and other colleagues. We have a lot of discussions to come up with this project. So it's very collective work. We also work a lot with C40 and the CCFLA. We had a lot of discussions to try to find, I mean, what could be this, how this project could be, this program could be useful. And it's really the first program of that kind that is looking the world of the urban issue, the urban sector, from the eyes of the NDBs. What are the constraints they are facing to do more? What are the constraints that they are facing to be more willing to finance urban projects? They are doing that. But the idea is to maybe cities and NDBs are very important actors for the transition. There is no transition if the urban transition doesn't work. I mean, the cities are concentrating a lot of challenges, of issues of the climate change, could be in mitigation or adaptation. So, I mean, to be successful in the transition means to be successful in the transition of the cities. This is something important. And the banks, the development banks on the other side, they are very important player also. So the idea is to close this gap between the NDBs and the banks, but to work very closely. So the idea was to see what are missing for the NDBs, to the PDBs, to do better and to make more projects coming through. And this is the objective of this project from the beginning. So we come up with the project with three main components. The one is on the capacity building, to provide big support to the members through, so for example, to have consultants embedded, experts embedded in the banks to help, because we need a capacity, and this is something we learn about a lot about the banks, that they lack of human resources, they lack on knowledge. So we can provide this through providing experts that can work with them all along the project. The second thing is the other component is about to finance some projects, because we need to come from the theory to the practice, and also to see how we can to develop the capacity of the banks also to be an advisory partner for the cities. It is important also to have this technical capacity, as just mentioned Samuel. IFD, he mentioned that IFD is not only financier but also a technical agency, and I think it is important to have this capacity of providing the advisory. It is always. I mean, it is still there, but the importance is to increase this capacity and to make it maybe more systematic. And the third component is about knowledge sharing. It is important. This program is dealing with 5 countries, 5 institutions in different countries, 4 emerging countries and 1 developing countries, which is Mozambique. So we have Brazil, Colombia, Indonesia, South Africa, and Mozambique. The idea is to have a 2-dimension program. One is global, so we have the idea is to exchange at the global level the different experience from the different countries, and to see if there is some experience that we can get from one part of the geography to another country. So this is an important asset, and of course to have this local dimension to work deeply with all the actors locally, to ensure that we create an ecosystem which is favorably, pushing for the implementation of a good project. So this is where we are now, and we just wait for the approval to. We are waiting for the approval of the project to start the implementation. But I think that this is where we are, and so we defined the use of this 20 million euro with the different colleagues. We spent 2-3 days, I remember it's 2 days in June, to come up to finalize the concept of the project. And really, I thank all for the participation and for their the participation for this project, and for the collective work and hard work. Thank you.
Thank you very much, Mustafa. I think that gives a good notion of what NUCA is, and thank you for explaining to us what it means precisely. So I will now call our panelists, if possible. So if I could call Mr. Olympus Mantata to come, and then also Mr. Pradana Murthy, and then I believe that we may have a Brazilian presence on screen. Is that correct?
Yes, I'm here, Marta, from Brazil, from BNDES.
Tudo bom, Marta?
Tudo bem.
Boa noite de Dubai. Sorry, we're not going to do it in Portuguese, but don't worry. But at least being half Brazilian, I have to at least say, hello in Brazilian. Otherwise, she will feel that I forgot. So, excellent. So, because of the hour, right? Because all of you have probably done already about 12.5 miles today, if not more, walking. We're going to be incredibly efficient, in this panel, because I'm going to ask you everything in one go, and then each of you has about 5 minutes, to cover the topic. So, Marta, I don't know if you're going to present slides, but if you do, it would be great if you try, because here, we are many hours ahead, from Brazil, and so, the energy level, everybody still have their eyes open, but we need to be sure, to go.
I'm gonna share my screen here.
Okay.
I have 3 slides to show, just to guide
3.
my lines.
Okay, so yes, 3. I'm optimistic then. That's great.
Okay.
All right, so I think let me ask you the long question, right? And then essentially each of you, in turn can take, a response to that. So it's a 2-pronged question, right? The first question is, what can you tell us about, what your bank is doing to support urban climate? And I think it's important there to also make a bit that distinction, right? Because many banks do urban, right? Then fewer banks may do actually urban climate. So it would be interesting to hear from you how you see that particular intersection, because that's what NUCA is about. And that's also, I guess, we're at COP28, so that climate element is probably important to mention. So that's the first one, is really one of saying, what is the activity that you do in this area? And the second one, because we have to, I'm a former multilateral development bank too, so we need to talk about financed instruments also, right? Otherwise we remain a bit too, I would say, general. So it would be interesting to see which finance instruments, in your view, that you're using are essentially most effective, to respond, to financing requirements. So perhaps, Marta, since you're on screen, maybe we'll start with you also, because I'm also half French, so I tend to be a bit too structured. So I'm going for alphabetic order, and your name starts with B, so we'll start with you. So just about 4 or 5 minutes will be great. Thank you.
Okay, thank you, Josue. I don't know if you're seeing my screen. Oh yeah, I think you can see my screen. Thank you for the invitation, and congratulations IDFC for organizing this panel on such an important subject. My computer just blocked. It's not passing the slides. Well,
do you want
I'm sorry.
somebody to take over, and then you can fight with the computer while
Yeah, maybe.
colleague. Let's do that. Okay, so in my incredibly methodical way, my incredibly methodical way, then that's it. It has moved. Go ahead.
Okay, so I think I'm not. I think I'm not the one passing the slides. I think the technical team from you is passing. Well, here's just a few numbers from BNDES. BNDES has a 200 billion portfolio on infrastructure and energy projects, 15 billion projects just in 2022, 2,000 projects since in infrastructure and energy, and 100 billion export finance since 1991, and 120 billion is the portfolio of BNDES on social, environmental, and climate projects. And we have just won one award in innovative financial instruments. So could you pass for the other slide? Okay, here are some instruments that the BNDES has for financing climate projects. We have the Climate Fund, linked loans. We have, I cannot, I'm sorry, I cannot see the slides very well. Let me just, I'm really sorry. I cannot escape from the big screen, so I cannot see the slides. Well, I'm going to improvise without the slides. Well, BNDES is the Brazilian National Development Bank. So we are the bank that finances the public sector in Brazil. The private banks, they have difficulty in accessing the public sector. So we are the ones that provide finance for the cities. And we have an urban development division, and this urban development division is the one responsible for the credit lines of BNDES for the cities, and they are now focusing on adaptation projects, climate adaptation projects. And we also have a division, which is very important, that now I can see the slides. Thank you very much. Could you pass the slide, please? So I'm already talking about how we are organized here in BNDES to finance the cities. Another one, please. Could you pass one more? Thank you. So we also have this structure, project structuring division, which we have a pipeline of projects for more than 100 billion pipeline of projects that are being structured by BNDES. And we have a close relationship with the cities, with the mayors, helping them to structure these projects. And what we have to do now is to insert the climate lens in this agenda, especially in the structuring project division. They have a capacity building gap that we have to address. But the urban development team, the credit team, has already reached this point that they are already fomenting climate adaptation projects to the cities that they have already a long relationship with by financing city projects. So BNDES has this capacity building approach while dealing with the public sector in these two agendas: the credit finance and the structuring project division. We are the main public bank that finance municipalities and states in Brazil. And we also have a net of regional development banks in Brazil that BNDES funds this regional development banks. So, and they can reach smaller cities. Could you pass the slides, please? Another one. So here are some projects that we have financed, climate projects. So in São Paulo, which is the biggest city in Brazil, it's a big metropolis, BNDES helped São Paulo to, we structured the concession of the city parks. So they, which includes revitalization of iconic spaces like the Ibirapuera Park. And we created, these parks are green spaces in a very polluted and heavy traffic city and a big city. So these parks are now being used by the population. They have services inside them. People, São Paulo is a very gray city, so these green spaces are very important to the microclimate of the city, as well as a mitigation as a GHG reduction emissions.
Yeah.
So,
Marta, sorry to interrupt you. Just in terms of timing, it would be good.
Yeah, let me advance. No, and also now I'm going to answer your second question, which is about the innovative financial instruments that BNDES has launched to finance the cities in Brazil, because the cities in Brazil, they have a very restrict fiscal space. So it's difficult for them to get credit. So we launched a blended finance instrument with one of the agendas was urban development with climate adaptation and climate mitigation focus. So blended finance is one of the innovative instruments that we are tackling climate finance with the cities. And the last slide, please, is about BNDES participation in the NUCA program. We are going to partnership with ABDE, which is the Association of Brazilian Development Banks. As I said, Brazil has this net of regional development banks, and they're going to be very important to reach the smaller cities or the medium cities that sometimes BNDES cannot reach. So tools, capacity building, feasibility studies, stakeholder engagement, which the NUCA program will provide, is going to be very important to BNDES and these regional banks to scale up the climate agenda in Brazilian cities. Thank you, and I'm sorry for the technical problems.
No problem. You're Brazilian, so you know how to improvise. So it was excellent.
Yeah. Thank you.
So if I may turn to DBSA now, Mr. Mantad, again, in a way, the same question, which is essentially, describe a bit in DBSA, how is this urban climate, projects, how are they developed? And number two, in terms of finance instruments, are there certain highlights you'd like to make? Thank you so much.
Yeah, thank you very much, and thanks for inviting me. I, I, I come from the climate and environment finance side of the bank, which sits under our project preparation division. And I guess the reason why I'm mentioning the division I sit in is that we also have in the same stable a unit that basically assists municipalities from a planning point of view. So what that means is early planning that leads to development of IDPs, integrated development plans, that leads to basically a pipeline of infrastructure projects. That's really what the unit covers. So what we have seen as an important intervention is to really look at that planning stage to say, that's the right space to start thinking about climate issues. Actually, beyond that, just generally biodiversity stroke, the broader and nature-based interventions to be inculcated in the planning stage so that your resultant infrastructure plans already positions the projects, the infrastructure projects and programs to be able to access climate financing. In actual fact, we currently will be starting a program supported by the GEF with a number of cities in the country to look at building or putting together climate risk and vulnerability frameworks that would form the basis of the planning by our planning unit. So I believe that is an important intervention from our side, especially because we operate a lot, or a bigger part of our business tends to be in the municipal space. The other thing that I thought maybe is worth mentioning that we are currently working with a number of cities, including the city of Tshwane. So we're looking at an e-mobility program, basically looking at piloting electric buses, in municipalities, with the view that post that stage we can look at significant upscaling of the program. And in that regard, we tried to look at the synergies between the various funding mechanisms, such as, typically working with your GEF to look at the enabling environment side. Then when you go on to early piloting, leading into implementation, you look at how you pull in the Green Climate Fund. And I think to date, in spite of the challenges that comes with it, we believe we are seeing some headway. And I wanted with that to just talk a bit about the financial, hopefully can call them innovations that we are looking at or have started deploying that we believe are beneficial to cities. The first one I wanted to talk to, even though we positioned it as more for private sector interventions, is a climate finance facility. And the idea was really to look at how we crowd in a significant private investment into mitigation and adaptation projects. And for cities, specifically where this program was concerned, was to see how we support private sector deployment of projects within cities, as I've mentioned, for mitigation adaptation projects. And this is currently ongoing. I think I should talk about a bit of challenges that we've had, because there was earlier an intervention that talked to the challenges around local currency financing. This program that I'm talking to was co-financed with the GCF. And the first challenge that we had was that we obviously receiving dollars from the GCF, we struggled to deploy locally because nobody would take the currency risk. And we took, I think, just about 2 years or more trying to sort that out. And it's only now that we've been able to sort that out and are starting to implement. But quickly, while time allows me, I'll move on to the next instrument that we put in place, again with a partnership from the GCF. We put together an embedded generation investment program. And the idea was to support both private sector and public sector, and the public sector specifically the municipal space. We found that when we started to deploy this facility, it was quite easy to build a pipeline on the private sector side, but on the municipal side, we faced a few challenges. First of all, there was mention around capacity, just the capacity to be able to put together projects that could be funded was a challenge. But even more, we found that possible projects that were sitting with the municipalities were still at a very early stage, even earlier than what our project preparation facilities could be able to support. That would be very much concept stage, not even at pre-feasibility. And that's where partnerships were quite key. We partnered with a UK Pact and started helping municipalities, work on projects right up to pre-feasibility stage. When they get to pre-feasibility, then we could support them through our project preparation facility, transitioning them to the forbidden way to bankability, so that they can, start benefiting from our embedded generation program. But we believe, that is actually going quite well. We're actually looking at expanding this program with UK Pact. And, but this was the important thing. The elements of what we led through the UK Pact project, transitioning projects from the early stage to bankability, or even to the entrance to our project preparation facility, we found useful in a new program that has recently just been approved by the GCF also, which was, I guess, at that time at least the largest approved amount for an adaptation project, and that was for a water reuse project. The same kind of challenges became evident, that you are going to have to help municipalities, start from that early stage to get to a point where we can be able to finance them through this program, so that we don't have facilities that are sitting but we are not able to tap into. So those are the three examples I would like to refer to. Thank you very much.
Well, thank you very much for this very precise description of this, and also interesting because they address different types of issues and opportunities, right? So that's great. So now may I turn to you, Mr. Pradana Murthy from PTSMI. Then, do you remember the question still, or? Yes? A gentle reminder. No, just, no.
Thank you. I'll start with the explaining about the landscape of local governments in Indonesia. First and foremost is the political system of Indonesia is decentralized. Some of the power are being delegated to local governments, but some are retained by central government, including most of the revenue collections retained by central government. And how local government can actually fundraise are heavily regulated by central government. Although it can be open, from municipal financing to municipal bond, but the standard is quite high. That's set by central government. There are 548 local governments in Indonesia at different levels, provincial, and then city or regency. And the capacity of those regions varied a lot. You're talking about Jakarta, in one end of spectrum, which is very rich and high capacity, including human resources, down to a newly formed regency in up mountain in Papua. So very varied capacity that we're talking about. And for that reason, capacity building is almost need to be done from 101 types of capacity building. So it's like what is debt and how to manage debt, let alone the climate actions. So SMI first embarked in this municipal financing back in 2015. Before that, municipal financings are done centrally by Ministry of Finance. Right now, Ministry of Finance aspire that most of the municipal financings to be done by SMI, although some of the maybe big projects are still being done centrally to from say let's say for example Jakarta MRT was financed with a two-step loans modality from international FIs to central government and to local government. But the majority of municipal financing is expected by SMI. So out of the 7.6 billion worth of assets of ours, actually 2 billions are in the form of municipal financing assets. And we need to do more, and we are being instructed by our Minister of Finance to do more. Right now, our municipal clients is around 100, so it's a long way to go to reach the whole 548 municipal governments. So I think when we started, of course, we have collaborated with people who's more knowledgeable than us. So we collaborated with people like World Bank and also supported by AIIB as well as Swiss Contacts. They provided TAs and loans. So along with that is all capacity development is being built within SMI as well as capacity building to municipal governments. How to actually do safeguards, how to actually write feasibility studies, how to actually do environmental impact assessments, and how actually to connect local planning to national planning. Yeah, and as what the mayor from South Africa mentioned, that Indonesia is also sometimes also gaps between national targets and local targets. Yeah. But again, we try to educate municipal governments to actually identify where they want to go with these activities, in terms of national targets contribution as well as local targets contribution. So I think that is our role and the challenge that we have today, and I'm pleased to have NUCA. Yeah, that is going to be an education not just for local government but also for us. Yeah, and I think next in our planning is again this needs to be more comprehensively done, and we are not happy just to provide project development facilities, TAs, capacity building, but we are going to take one step further, mirroring what's being done by MDBs. We are going to develop a subnational framework agreement between us and our partner municipalities. So that's going to be a comprehensive financing plan that we are going to do, that's going to align KPIs with local and national targets. Yeah. So I'll stop there. Thank you.
Thank you so much. That's quite interesting, the last point there. But so thank you very much to you all. Martha, also, thank you. We have not forgotten you, even if you're only in 2 dimensions. Before turning to concluding statements, maybe I'll just go, because of the hour, very telegraphic on what at least I've heard. Which is essentially the following. I think capacity building was mentioned across the board, interestingly, both to the municipalities, but also within the institutions. It was interesting from Marta to hear about the notion of intermediary. to a certain extent, right? At least within Brazil, that you have the famous, I don't think it's a forbidden word yet, but blended finance was mentioned, although it sometimes is a bit overused. I think planning was also, mentioned, I think very much in terms of the support and knowing essentially what the money is going to be for. Then I also heard another one that we hear very often, enabling environment, right? So it's a very nice EE, but it's a very complicated one. We heard another one that we hear all the time about private sector, right? One that I think is absolutely crucial, but that we hear less, which is local currency, right? You've mentioned that, and I think that is, your institutions and those here, I think that that's a major role that they have. One that I heard a bit, I think particularly in your introduction, when you mention, I think is the organizational dimension, right? Climate, urban, country, each of your organization has its challenges and its opportunities. How you put this together is also something, that's very important, and how you will deploy, this activity. I think that's where, NUCA will also hopefully, be helpful in terms of structuring, your approach, both in terms of the capacity building, the planning activity, financing instruments, and essentially, build up of pipeline and delivery. So sorry, I've been too long with my telegraphic, or it's a very long telegram. So that gives me the opportunity, I should stand now to be official, to invite Mr. Edwin Surizag, I hope that I'm pronouncing your name correctly, President Director of PTSMI, for concluding remarks. Welcome and thank you. I think you can have the grandstand.
Thank you. Good evening, ladies and gentlemen. I think you have summarized very thoroughly about the.
I have to show I've listened.
Yeah. I think from my side, I think first of all, I'm happy to witness the collective commitments that we built towards sustainable and climate resilient cities. Yeah, I think we highlight two important points during the discussion. First is the criticality of the cities and climate urban financing and climate urban projects. Yeah, that number one, and the second is the opportunity for the PDB, National Development Banks, to scale up urban financing. I think with regard to number one, I think the importance of cities, I think the panel number one, session number one has addressed especially AFD about the challenges of the cities, city government, technically capacity, and financially, financial autonomy in tackling especially the challenge of the climate risks. And I think National Development Bank can emerge as a key player in bridging the gap. Of course, Pak Pradana mentioned very clearly about our role, and not only providing finance to the local government, but also our pathway to become a truly development banks. Lastly, I also would like to appreciate IDFC in taking initiative to support National Development Bank through NUCA programs. We hope that this program can best support the National Development Banks by strengthening the capacity for the urban climate finance, and also help banks and the city jointly bring projects, bankable climate projects, with the support from German Federal Ministry for Economic Affairs and Climate Action. We hope that we can align the city's expectation by deploying technical and financial support for urban climate project preparation and investment. Thank you.
Thank you. Thank you for showing energy, in your last applause maybe of the day, maybe tomorrow it starts again. But anyway, thank you very much to all. Thank you for your resilience, not only in climate terms, but in physical terms. And good night to everybody. Thank you.
Thank you, Josue. I would like just to say that please remain here because we have a small cocktail to celebrate our the completion of these projects. And please stay here for joining this cocktail. Thank you very much.
Thank you. Goodbye.